We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back to the Capital Mindset live stream show, everyone. Hope you guys are having a great day as always. We've got a lot of topics to get through, and the topics are listed in the title down below and in the description. That also should be a guide, is not the only things we're going to be talking about here today. That's just kind of overarching stuff. We're going to get into a bit of different earnings. Netflix, I know, is in the thumbnail, but that's not the only one we're going to be covering today because there's a lot of earnings. The more important earnings, at least for my portfolio, are going to happen next week. And it looks like, it doesn't look too hot of a start, or we're kind of in the middle through earnings season. So we'll see what happens. But the first thing that we're going to be discussing, we're in this view because I had this to share, is market is down. Market is crashing. I've been hearing this a little bit, and I think it's because retail investors, their stocks in particular, are crashing a lot. And maybe more so than the entire market. But I don't really think that that's kind of taking the true perspective. Bacon, what do you think about that?
Of what, the markets, how they've been?
Yeah.
I'm not that anyone really cares, but like behind the scenes, I've been getting hammered. But ironically, today was actually a green day for me in my active port. So,
But would you say the markets this year so far are getting crushed?
no. Like we're gonna need some more days like this to say crushed.
Right, because
yeah, let's year to date this.
it's
Like,
still positive year to date.
yeah, like
Now, you could argue this has been a violent move down, but it's
yeah,
violent.
but like that this is. Like some people would say, because this is what was that percentage again? Like just under 5.
6.9%.
Yeah, like from a quantity perspective, depending on the asset class, some people would say that's kind of within like the realm of believability. Like this wouldn't necessarily stand out to
Yeah.
some people.
Just a healthy pullback, nothing
Yeah,
more. Depending on what you've been invested in, if you've been invested in companies like, I don't know, let's say Tesla, you've not been having a good year so far.
no,
Absolutely. And this is not to just rag on Tesla, but really looking at the performance year to date, it's down 40.81%. So a lot of retail investors who have a lot of their wealth concentrated in companies like Tesla, they are not having a good go about it. But if you're kind of outside that, you're broadly invested in the index, you're doing fine. This is not. And so this is kind of more of a conversation of, are you blaming the right thing, right? Is it you, or is it the macro? Is the environment not good? What's going on? And so that's really a self-reflection that a lot of investors maybe are lacking a bit. And really, we've had an insane year towards the beginning, with some of the top holdings in the S&P 500 really drawing up a lot of the gains. And then some of that has been retraced, but still, if you really look at the bigger picture, they're up still quite a bit. Mainly when you look at companies like NVIDIA that are down 10% today, they're still up a ton year to date, up 58.2%. So this little pullback kind of looks like a blip with that context. So, and we can talk about this. I mean, if you want let's call an initiation of a bear market, we need about 20%. But when we exceed about a 10%, let's call it down year, I think that's a interesting / healthy pullback. So we're just down 6.9% from the peak of this year to now. And really, if we want to give up some of the gains that we got from last year, we have a ways to go. And so probably from the totality of this year, a 10% pullback from there is probably what I would say is a really good opportunity. But we're going to be talking more about that throughout this live stream. We have Andrew, who's also going to be coming on here later. So I'm trying to also save some of those deeper conversations for when he arrives. Okay, so we have a question that came up. What do you think of Lucid Motors? LCID. Let's pull them up. And we're gonna go into. I guess I can pull up their filings
Ooh,
here.
boy! Oh boy!
All right.
That
So Lucid
that
Motors.
that
Mhm.
share price, that market cap, that Lucid Motors.
This is them, right? Yeah, it is.
Yep.
All right, just making sure it is them. Nice.
Yep.
Many of you may not know this or remember this, but this was a company that Kevin did pump. And I did gamble on this company. And I thank him for it. He helped the retail crowd get in, and we could dump our bags on them. That sounded bad. It's a lot nicer than it really was. It wasn't a ton of money, don't worry. I didn't profit too much.
Off the misery of others, you jerk.
So let's take a look a little bit at this business here. We have good cash, short-term investments, all that. That's not where we're going to find the problem. Long-term debt sitting at 1.9 billion. Now, the problem with this business is that it's a very capex intensive business. So this balance sheet doesn't seem able to support the necessary capex to scale something the likes of Tesla has already kind of proven. So all the criticisms that you've seen on this channel by guests, even by myself on Tesla, which by the way, I enjoy the product. Bacon, you don't enjoy well, you don't think the product's good though, right?
Well, I mean, I
I'm
don't
trying to show
have
we have,
one.
we
It's
have
just
diversity of thought. Make my point.
yeah.
Say you don't.
Okay, fine. I don't.
I want to show the audience we have diversity of thought. No, I'm
Like,
kidding.
wait, are you? By the way, are you trying to like show the balance sheet of Lucid?
Oh, yeah. I always
Yeah, I was gonna
forget.
say
I
it's
have
not. Yeah, it's
to.
not
I have to keep
sharing.
switching.
Yeah. And for the viewing public, if we are able to bigify, yeah, there we go. See, audience, this is why I'm like sometimes brought on. This is my value add. Like, comment, and subscribe.
The people demand it. Okay. So yeah, with Lucid Motors, you have a car business that, just stated the obvious, that is a very capital intensive business. So the necessary capex to scale here, it's quite large, something that Lucid Motors doesn't seem to currently support. They could dilute, right? But that doesn't seem to be a problem, or sorry, that doesn't seem to be a solution. And if I were to probably make a guess right now at the shares outstanding, let me pull up a chart. Give me 1 second as I pull this up. I would, yeah, okay. Well, let me switch this over to percentages before I start to share this. And we should put this here, come back here. All right. So is this properly? I need to zoom in because it's like, there we go.
Yeah,
All right. So looking at the percentage, of course, you kind of have to ignore the 3-year. So let's actually go and customize this. We want to go probably right after they SPAC'd. So that was like around this period here, because I remember they were still whatever they were called. So we're gonna pick, from around February 2022, around there, or you can kind of just trust me that from here to here, that's still quite a bit of a dilution rate. So you can ignore and make the exception here because that's going to be wonky. But from here, this point, you can see actually, this point here is acceptable to at least make the point that I'm making, where they did in fact dilute the shareholders quite a bit, and arguably they still need more capital to accomplish what they want to accomplish. And so you're a really early investor in an unproven business, so you could just wait. If you're really interested in this company, not financial advice, but how I would play it is I would just wait, let them prove themselves, let them scale. You had plenty of time to, if you were looking at something like Tesla, to wait until they had a mass market car, they had the factories, they had done a lot of the capex. Now, the Tesla of today, balance sheet wise, is perhaps the best it's ever been. But something like this, I actually have concerns whether or not they're going to be able to accomplish that. I have videos on the channel talking about some of these other businesses, like what was it? Not Rivian, the other electric shitcos. Pardon my French, but that's what they are.
No, demonetized.
We don't care. But what was the other one?
With one that we have a list.
Yeah, there was a huge list. It wasn't
Lordstown?
Canoe. It wasn't Lordstown. It was the other one. And I got a lot of those investors kind of coming at me for it.
Okay, that canoe.
We can even go visit the video if we figure out what it was. It was trying to think. What was the video?
Workhorse.
Lion. It wasn't Lion. It wasn't Workhorse. No. Good guesses though. Good guesses. Wow, that's like a reminder how many shitcodes there are.
Yeah. Rob H says Neo.
No, it wasn't Neo. I think it was Mullen.
Mullen.
think
Oh
it was
yeah,
Mullen.
Mullen was another one. Yeah.
Was it Mullen or was it another one?
Sneed says Nikolai.
No.
Fong says Potera.
Wow, there's that many. There's too many.
Tell us there was a bubble without telling us there was a bubble at the time.
Yeah, it was frankly insane. But anyways, you can kind of, if we remember it, it wasn't Canoe. It wasn't Fisker. There's too many. Oh my gosh.
Yeah, that's why I said there was a list.
Let me see if it was Mullen. It might have been Mullen. I mean, they all occupied the live stream at some point.
Yeah.
But no, it wasn't Mullen. It wasn't Mullen. What was it? It was from the UK. That will narrow it down somewhat. It was from the UK. But
Ryan Ford.
VinFast, Archimoto. Bro, was it a British company? Yes, it was, Henry. All right, Henry's gonna get it. Because he's
undefeated.
He's kind of locking onto it. Arrival.
Thanks, Rob.
That is the one. Because I took it as a request, right?
Oh yeah, yep. Yeah.
And so I tried to avoid companies that I didn't really care for. I didn't care for Arrival, but it was requested, so I honored the request. And then when I have time again, I will be doing that again. But yeah, I got a lot of pushback in the let's call it Arrival discussion. So let me actually I'll share this tab. Let me come back here. So here's the video. You guys can watch it if you want to. We will arrive at the truck stop with Arrival stock arrival. This was posted. Can you show me the date, please? There it is, May 3rd, 2022. And then, yeah, you can go through the comments. A lot of them are still there. And I'm the type of person that, yes, I'll comment on your comment if you were trash talking about a year or two later. And yeah, you see like poorly researched, blah, 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 blah. And then probably not good advice to skip the video back then. Yeah, I know. I'm a little petty. Whatever. And then, yeah, it continues. This is very accurate take. But yeah, let me show you the share price since then for some referencing. So wow, it's totally not a shit show. So point what I was trying to make with that is there's a lot of fervor behind some of these stocks, and a lot of investors get really attached to them, which is, I'm not saying the person who's asking about Lucid is in that space, but you got to be very careful and do a lot of self-reflection whether or not you're kind of getting in love with the story. And there's a lot, you have to be very careful when you go on the internet, because there's a lot of people that will kind of echo that enthusiasm, and that enthusiasm can be very toxic. What I mean by that is it might be contagious. You might get that enthusiasm too, and that can be very harmful as an investor when you start to get blindsided by the prospects of a business. So if you actually read through those comments, you'll see that all those people that were commenting mean things towards me based off of my opinion, they were showcasing that they had a very strong emotional attachment to this business that was overtly a shitco back then, and they could not see it or be reasoned with that it wasn't. And so the consequences, I don't get hurt. The consequences, they get hurt. So, I mean, it didn't affect me. It only affected them. So now we see like kind of the consequence of that. It's down 99.99%. I think it actually is bankrupt. And you can look at the arguments that they made, all the excuses of partnership this, partnership that, doing this, doing that. They're going to be the first company to do this, the first company to do that. Go figure. And then so we see that, of course, with new companies, because it's easy now to point back and say, look at that company, it did that. We have plenty of other examples: Tattooed Chef, Voyager Digital. We have Skills. There was some other companies that are not bankrupt. Very Good Food Company, they're bankrupt. I mean, name it on the vegan side, and they're gone. Open Door. Very few of the retail names sort of survived. Like not everyone's a Palantir, not everyone's a Tesla. Very few of those are actually the case. And then a lot of times they get very exciting for retail investors after the fact, and lesser so are the people that were believers before the fact. And arguably, maybe there's an element of luck because they were investing in a business that still hadn't really proven itself in some cases. But Palantir, for example, has proven itself, but maybe the valuation is where we can have the debate. So looking today, someone said in the chat, SoFi. Well, yeah, SoFi echoes a lot of this because the retail investors are very, let's call it, passionate about the stock. And you'll see that the bull case is very repeatable. So meaning like it's very easy to parrot it. And I have the bull case at this point memorized. And oftentimes when I engage with someone, it's almost like I'm engaging with the same person again and again and again with no new argument. So it's like they're a hive mind. So I talk to someone who's a SoFi bull and they provide no new information. That's how I know they all kind of watch each other and they all read each other's information. And so when you're talking to someone, they're just saying the exact same thing as the tweet you just read or the video that you might have came across, and they just kind of repeat the information. Like example, the point on credit score rating. So the average credit score there is like 760, even though for personal loans, it doesn't matter as much as people might think. On and on and on. Moments of silence for Corsair Gaming that hit a new all-time low today. We'll take a look at this one.
Oof.
CRSR.
Yeah,
So at some point, I mean, it's a tough business. At
Yeah.
some point, these businesses can be interesting buys.
Mhm.
But why would you want to go out of your way to get involved with a device maker in a somewhat commoditized business like Corsair, right?
Yeah.
Well, this doesn't mean anything, but I have nothing Corsair here. I'm actually 100% Razer mouse, Razer keyboard. And this keyboard I really like because it's metal, but the Corsair makes good ones too. And I think they also have like a metal keyboard too. Yeah, I have nothing Corsair. This is Rode mic arm, Rode sponsored, not sponsored, just kidding. But
But
just
it
naming
could
off
be.
brands, but it could be sponsored. Yeah. So yeah, nothing Corsair. That doesn't mean much, but it goes to show I'm trying to illustrate that there are like tons of options, and frankly, there's nothing that differentiates it too much. Because honestly, I would say the same thing for Razer. There's nothing that differentiates Razer too much from Corsair. So I wouldn't be adverse to choosing Corsair. Anyways, let's not really get into the Corsair gaming thing. We don't understand, bro. There's underbanked minorities out here. Oh, yeah, that's another.
Is it another one of these moments, Fabio? No.
No. It's just that's actually one of the bull cases that they're serving the underbanked.
Yeah.
Which is kind of almost counterintuitive to the other point where they're banking, the Henrys.
And yeah, the highest quality of
high earners, not yet rich.
Mhm.
Which I don't agree with either. I don't really think that that's the case either. Because high income earners, they would still qualify quite easily for some of the other banks that provide a lot more benefits.
Yeah.
Already when you're in a high income earner. Not yet rich just means you don't have as much liquid assets. You don't really need that much to start qualifying for benefits at certain other banks that then supersede the benefits of SoFi. SoFi is really good, in my opinion. I've recommended it to people who are literally just getting started. If you're just getting started, you're a college student, etc., SoFi is a great bank. And then after you have a serious amount of money, I recommend sort of switching over to a bank that can better serve your needs, gives you better service, gives you a lot more product offerings. But when you're in that beginning stage, let's call it, to kind of, should I do video game references? I don't know what references to make for the audience. But if you're a Skyrim fan, right? If you're a Skyrim fan, it's like Riverwood. You just get started. You have Sven, you have Fandel. You got to make your choice. Who you're gonna help, and then afterwards you got to go to see the Jarl of Whiterun, right? Which is more serious thing.
While we're here, are we able to max chart this just for curiosity and
of course,
possible loss porn?
of course.
Woo, buddy, look at that.
Another SPAC craze.
Pandy Wendy moment.
Which I think now the private equity firm is able to sell the shares. I think they had limits. I think it was until 2024 that they weren't allowed to sell the shares. But anyways, pretty sure you're all Skyrim fans, but Fallout got the Amazon show. No, absolutely, but still Bethesda and Amazon shareholder. I haven't watched it yet, but I've heard good things about it.
Yep. Same.
Look at this. Everyone understood the Skyrim reference.
I would have understood, Fabio, but I took an arrow to the knee. This is where chat boos me for reviving a dead meme.
Hey, at least I didn't reference Oblivion, okay? If you're talking about my age, at least I didn't reference Oblivion. Oblivion's older. All right, so we'll talk about this. Will asset managers pick up some gaps in lending from big banks? Yes. So we can talk more about private equity when Andrew hops on, but private equity businesses are one that I've actually started accumulating finally on this pullback. And I had Digital Bridge, so that's not true. I had exposure to private equity. I had a brief stunt with Brookfield Asset Management that I did do a video last year, but really private equity's done really well last year, and now seemingly has had a momentary peak and has started to sell off. I've picked up one private equity firm, and what you're referring to obviously is private credit, where a lot of the private equity firms are just stepping in and kind of filling up the gaps where a lot of the major banking institutions have lacked in terms of their activity and focus. So yeah, I do think that there's both demand for alternative credit products that private equity firms are able to meet, and banks have a lower appetite to lend, for better or for worse. We can get into that at some point if you guys want, but for better or for worse, they do have sort of this lack of appetite to lend in some markets, and there are people who want to borrow. So that creates the opportunity that some of these businesses have been able to take advantage of. Okay, what would be considered a cheap valuation for Palantir? So Palantir, there's a bit of a problem. And you know what? I've been ranting. Bacon, what do you think a cheap valuation for Palantir is?
Sorry. I'm just here for memes.
Give us a price, and then I'll go into it.
All right. Let's go $350 a share. It's a buy right now.
Okay, so Bacon says it's the buy right now.
What would that imply for the market cap?
So 350 a share. That's over a 10x from here. So that's 450 billion if it was a 10x, and then you have an additional 50%, over 50%. So that's actually a 75% increase from there. So right now we'd be at 450 billion times 1.75. So yeah, let me just do that real quick. 450 times 1.75, $787 billion market cap. Assuming shares remain the same.
Yes.
And assuming this is accurate, the market cap.
Market cap here, from Google.
So yeah, we have one issue. This is an important issue: the dependency on government versus commercial contracts.
Yeah.
So government contracts, there's one very good benefit, and same with commercial. I'm not going to say that commercial isn't as well, but government contracts, very sticky, but they have a lot of pricing power for obvious reasons. And you might be able to say that, for example, the government contracts can be a lot more reliable because you have a customer that will never face financial distress. It can just borrow more money if it needs to. It can tax. So there's a lot of levers government can pull to get you your money. And so there's a benefit there. It's similar to how if you have a real estate property and you're lending to the government versus lending to private individual, there are some benefits to renting to the government, such as getting a higher rental rate up front. But most of the time, from the ones I've observed, rental increases on government tenants is going to be a lot lower. So you get more upfront, but lower increases. And so obviously you can kind of start to think about what that opens you up to in terms of risk. Now, getting into government contracts here, the dependency on that is part of the thesis why a lot of bulls are, shouting from the rooftops, hey, we're growing commercial. So you're kind of watching for commercial growth. Last time I checked, the commercial growth has been good, decent, and then government picked up a little bit. From my recollection, I could be misremembering. And if I recall, a lot of the income contribution is coming from interest income. So that brings a little bit of a conundrum there, because if you break down the earnings, you start to see that a lot of the expenses is coming from stock-based comp. So comp to employees that they're not paying in cash and they're electing to use stock instead of cash. So that's still an expense, except you're paying for it. But yeah, but we have a GAAP profitable business. But how are they GAAP profitable is the nuance. So at the end of the day, you do have, for the most part, there's something obviously here in terms of quality of software, et cetera. It sort of acts like a quasi consulting firm. So, I mean, do we value it like a consulting firm? Do we value it like a software business? What do we value it? A hybrid of the two. There's one company I can think of that this reminds me of, and I know Palantir shareholders are going to be offended.
Yes,
like
they
really
will
offended by this.
They will.
But hear me out. IBM.
Yep.
The new IBM. Yeah. Because the modern day IBM is a software consulting business with some software products. So do we value it similarly to IBM? Right now, it's not valued like that. Do we give it similar kind of analysis that we do IBM, but just apply a higher multiple because of its growth prospects? Maybe that's actually the case. There's a lot to cover here. Basically, what I'm getting at in kind of doing this mental exercise is that this is already a complicated business. And so coming up with a fair value marker is going to be difficult. There's also kind of shifting through the hype, which tends to be a scary, let's call it, arena for an investor to be in. I don't like to particularly participate in businesses that have a lot of hype behind them. I prefer kind of the emptier fields, or whether it's because the business is maybe a little more difficult to understand, or maybe because the current circumstance appears scary. So we'll talk maybe about one of the businesses today that historically at one point in time went through a period like that, and right now it's selling off. It's in the thumbnail. So
yeah. To counter ourselves though, because I do agree with you, the interest income that they've generated, or interest revenue. Andrew has made the point though, or the argument that it is significant if we consider bottom line, but if we consider just gross, then maybe it's not as big a deal. But either that, or maybe I'm misremembering what he said, but it was something to the effect of the interest income, not as big a deal, or like that's one of those, I think, where we agree to disagree.
Mm-hmm. You don't think it's a big deal? That's a lot of it's.
No, I do. Like that. Like
do.
yeah, because like if I wanted to invest in a software company or a consulting company, and I'm carrying, like, if bottom line is so impacted by interest income, like if I wanted interest income, wouldn't I just go for a bank?
Yeah, no, fair enough.
Yeah. So I mean, maybe that's unfair to Palantir, in which case, shame on me. But no thanks.
Yeah. We have so question here. You're a Warner Bros. Discovery shareholder, are you not?
Yeah, maybe. Yeah, I am. Fair disclosure, yes, I do actively own a little bit of Warner Bros. Discovery.
So I'll disclose because I don't share publicly options. I do share only with club members the holding co options, but I don't share personal. But I'll discuss because, in good spirit, and I think Henry's been a member for a long time. We'll talk about the options trade that I have done with Warner Brothers Discovery. So with Warner Brothers Discovery, currently, I don't have any shares, but I do have open put contracts on Warner Brothers Discovery, and I've sold these. Currently, I closed the recent ones that were expiring today. I had closed them a little bit earlier this week. I didn't let them expire, although if I had, I would have still been fine. I would have collected all of it, but the theta decay and everything kind of got it down to basically worthless by the time I bought it back. And then I opened up new contracts. And so the current contracts expire, I think, on the 16th of next month. and at a strike of $7.50. I actually have a hunch I'm not actually going to get exercised on those either. So that if I do get exercised on those, I will then be long the common stock of Warner Brothers Discovery. I do not at this point in time have the appetite to buy Warner Brothers Discovery or another streamer, but I do see the value proposition, and I think that below $8 a share, it is very interesting if everything else remains the same.
Yeah.
So nothing crazy changes.
I will say that optically, it looks incredibly ugly from a debt perspective. But if you're willing to give yourself the put in the time and the brain damage for maturity perspective, for those that don't know, not as big of a problem. So make of that what you will.
Yes.
There's arguments for both, and I see merit in both. But that's why it's not like a crazy big holding right now. I have the option for myself to add some more, and we'll see how it plays out.
Yeah, it should be exciting.
Yeah.
We have another question. Thoughts on Apollo teaming up with Sony for Paramount? So I was asked this today in the club if I'm going to cover Sony. I'm not really interested in Sony, but I am interested in APO,
Yeah.
Apollo Group.
I wonder why.
Private equity. Yep.
Yes.
And this company, just to give it a brief glance or talk through, it's basically an insurance business that has the guise of private equity. That is their main focus. And right now they're acquiring a media business. They are also the owner of Yahoo. So it's not like their first rodeo in digital content. And now them stepping into the Paramount deal, partner with Sony, I think that Paramount has been horribly run for a very long time. There's a lot of problems to go through. I think that potentially Apollo could fix it up and transform the business into something better than what it currently is, because currently they are definitely lagging behind in the streaming wars and in the content wars, etc. And Sony kind of picking them up here also makes sense because Sony's also been pushing into content. They obviously have their studios. They also own, I think, Crunchyroll, which is the #1 distributor for anime. And I think that Sony now buying a portion or getting into this with Apollo really kind of fits well within their portfolio. They get a bunch of brands, now they own Star Trek, and then Apollo can try to figure out if they can turn around this business, either sell the remaining stake to Sony at some point in the future, keep it, hold it on the balance sheet, really whatever they want. But Paramount as an entity, I didn't really see a case for it kind of continuing on its own. Your thoughts?
Yeah, pretty much the same, more or less. It'll be interesting to see what comes out of this ultimately in the long run. But
okay, so I hope you also saw the video of me talking about why I sold ASPS. We sold for a very good profit. ASPS, for those of you who may not know, was a former investment of Capital Mindset. And you guys can follow. You guys can go to the videos referred to by Polar Bear Man, and also I also recommend watching the video explaining why I sold ASPS and look at the dates of when I sold. But the rationality as to why I thought it was a good time to get out. But this is a company that's been troubled. The initial investment thesis was it was sort of playing a hedge against a potential crisis that could have occurred due to a liquidity crunch. However, it didn't really pan out, but the trade still worked out fantastically because it was a company that was priced for bankruptcy. And then some of their assets internally were actually quite valuable, and they were able to sell it, and the business was able to survive. That was actually this final spike here. So that was the exit. And the remaining, let's call it deterioration, if we want to call it that, that was due to the fact that the other part of the thesis did not play out, and that's what the management had believed, that mortgage rate delinquencies would rise because that's how they benefit in the case of like a 2008 scenario where there's a lot of delinquencies. They would benefit tremendously from that. And let me actually zoom out all the way through so you can kind of get a full picture of what happened. Now, today, I am not up to date with what's happened. I see that you're using Elliott Wave to determine, your entry point and maybe your exit point. But fundamentally, I actually do not have any idea what's going on with this business. So I can't really comment on it. Besides, we did well, and that's about it. Will they survive? I have zero clue, because for the time being, delinquency rates, they're just really low. No one's falling delinquent on their mortgages.
Yeah. Altman Z won't save us.
Mm-mm.
No, very sad.
Did someone say free money glitch? Christian, are you Christian from the club? So if you are, and I know why you're saying that. All right.
I think I might know if that is the case.
Fabio capping on anime private equity. They should make an anime on private equity firm. This probably is
Oh
one.
no!
I think there's like
Oh
an anime
no!
for everything. All right. So, kind of
Yes.
going through all of this. Now let's kind of get into the sauce.
The sauce.
Oh boy, the sauce. Okay, it is Christian from the club. All right. Geopolitical.
No, you're getting yourself demonetized and canceled.
Well, we'll refer to it as the events.
Yes.
So the events in question. Hi, garbage goober. The
I
events
love
in
trash.
question that are getting everyone freaked out. We know that something happened a week ago. Then something happened over the weekend. And then we saw Bitcoin crash and we saw the market sell off. But we had already been selling off, so it's really difficult to describe. Maybe it's arguably it got worse. Now we have more news about another development in a country, not the country that was originally involved, but a country neighboring that country that was potentially struck by the other country that retaliated for the strike that happened over the weekend. You follow the flow?
Yes, you're talking about the horrific conflicts between Peru and Chile.
Yeah, Peru and Chile. Exactly. You're following. So yeah, there was that event that Sneed talked about. And now we have recently, okay, well, what's happening? This thing is going to escalate all the way through, and we're going to have something happen, and energy prices are going to increase. And what does energy prices increase mean for all of us? Well, it means you pay more at the pump, but also input prices increase.
Mm-hmm.
So I'll talk maybe publicly about one idea, because it's not the best idea, but it's an interesting idea. And I think it's fair to talk about it publicly. It's a company I've discussed publicly in the past, and I don't own currently, but am looking to probably add as sort of like a trade on this.
Mm.
Do you know what company that is by chance? I'm trying to see if
Occidental.
it's... No. Oh, but I missed an Occidental. I literally hate myself for that.
Oh no. People that are behind the scenes, I'll beat them to the punch, and I'll be one of the first people to throw egg at myself. I was like, yeah, last year, yeah, I think oil and energy should be all right. Like you'll have a nice wide open opportunity to buy in, and should be okay. And at some point, about like a couple weeks ago, I was like, oh, I don't have any strong opinions. I see strong arguments for both. Let me exit. And sure enough, it's probably been running. So everyone point and laugh.
I did not know you exited, but
Yeah,
yeah,
I did.
No,
It's
actually,
not actually
it hasn't run.
Oh, it hasn't. Okay.
No.
Well, anyway, feel free to laugh at me, anyways. It's a good pastime of mine. We'll all join in together.
It's ran from that January pitch though, about 18%.
Yeah.
Anyways,
is it a major? Is it a major or not even oil? Okay.
No, because oil is the more obvious mover.
Yeah.
It's less obvious.
Is it people that power DCs?
Sorry?
People
DC?
that power data centers, DCs.
No, that's separate. Gas stations.
Oh yeah. Okay. Yeah, I remember.
Yeah. So gas stations. We'll talk about that. But anyways, so the event that's occurring has presented an interesting conundrum, right? Both from political fear and uncertainty, and the real fear that if something escalates, we could have energy prices across the world, but I don't entirely know how much by percentage or proportion the United States will be affected. I know that maybe everyone will be affected because oil is a commodity globally. Is if you do something to hamper supply, such as a disagreement between countries, then yeah, everyone's affected. So that means that, okay, you have some of the more obvious plays: energy companies, oil majors, Occidental Petroleum's one of these such examples. You have also a couple things going for Occidental Petroleum. You have now the focal point of buybacks. You have Warren Buffett that owns a huge portion of the company. And so really that float that's trading constantly, of course, that could work against you if the guy decides to sell. But for the time being, it's sort of working in your favor. As far as supporting the share price, and likely as they continue to buy back shares, they're pushing up a lot of the demand there. And so there could be a rush to buy oil companies, potentially, I have no idea, if there is some sort of disagreement that causes energy prices to spike. Indirectly to that, we have some of the businesses that are adjacent to that, and that's, of course, gas stations, but not all gas stations, because if you look at some of the gas stations that rely heavily on the spend in their convenience stores, which is basically the gas station business model, then you have a little bit of a problem, because if you're paying more at the pump, and I'm going to be an optimist, I'm going to explain in a second why it's not the end of the world. And I think that the Western civilization is going to really move past this, given what Toyota has been developing and where cars are seemingly going. I'll get into that in just a second. But yeah, we have a conundrum here where, let's call for couche-tard, for example. Pardon my French. So funny.
Alimentation, as I butchered French.
Alimentation couche-tard.
Yeah.
Alimentation couche-tard, or something like that.
All the French people hit dislike. I apologize.
You can't do that. So they bent, obviously, probably longer term great buying opportunities on the sell-offs. But there's one in particular that I used to own, and we made a very good return on it through the time that we owned it, and that's Murphy's USA, Musa. So that's why I'm going to be talking about this one publicly. I don't own any shares currently. I actually traded it this week, but not like on purpose. I bought it and I kind of wanted it to sell off. It rallied a little bit and I got frustrated. I sold it, and then it actually sold off today. So now it's down to like $412 from $420 to $412. So right now, if it approaches the $400 mark, I think it's actually kind of interesting. We had sold the position to build out Taiwan Semiconductor, which ended up being a good decision. But looking at the thesis at play, it's pretty much all the same, except additional to this, you might see the volume increase at their stores, at their locations, with gas prices going up, because they're known as the value.
Maybe.
What's up, guys? How's it going?
Oh, rub it in. I see what you're doing there.
There you go. That was quick. I wasn't sure if that was quick.
That's quick. What?
He got the name. I didn't know how on the nose the name was.
Yes. Yeah.
What name?
For whatever it's worth, I hope you do not get caught in the rain.
Yes,
I hope you just have a pina coladas. Yeah, and I hope you don't get caught in the rain, because you're going on vacation.
Yeah.
Yeah.
I'm going on a tropical vacation, so.
Yeah.
And he didn't invite me.
You didn't invite me to Italy.
I didn't go to Italy.
You didn't yet.
Not yet. I'm going this year, though. Funny enough.
Doesn't change the fact you still didn't invite me there.
Yeah. I'll invite you. I'm actually going to Eastern Europe soon.
Wait, what?
Really? Where?
I'm going to Russia.
I can't go to Russia. I'm an analyst.
No, I'm kidding. Yeah, I'm not going to Russia. It's not Russia. But I'm going on like a Eastern Europe tour. So it'll be fun. I found out, like, I decided to do this like yesterday. So.
Oh, when are you?
For all the Eastern European subscribers, hey, we can converse and we can maybe meet up. All right.
So I guess just get me caught up. What you guys been talking about?
Right now, Musa.
Murphy's USA.
Oh, okay.
So current
At some point, I will
existing-
have to go get my dog. So if I turn off my screen, just know that's what I'm doing.
Woof, woof.
No worries. So Musa, could benefit from some volume increases and visits because they're the discount option. Oh, they actually never mind. I said to you guys they were at 412. They seemingly rallied throughout the day.
Yeah. Yep.
So they're at 417 again. But anyways, not a big deal. I think that they're going to be a big beneficiary if gas prices do go up. Not because they're going to make more money. They are going to make more money, but that's not the entire point. Because I think that they're going to get a large increase in volumes from visits. And even though maybe the consumer, because if you listen to their earnings calls, they talk about how the consumer is getting crushed and that the price increases are having a lower and lower effect. In fact, I was going to bring this up because I had this prepared for you guys that we're going to talk about Procter & Gamble's earnings because they had a lot to say about this. It was really interesting. So, and also, honestly, this has been repeated and parroted by Dollar General, Dollar Tree, Target's even said this, Walmart said this, no new information. Murphy's has said this, Rick's Cabaret has said this. They're all saying like a similar thing, that a portion of the U.S. economy, a portion of the U.S. consumer is sort of facing right now a conundrum, and they are rejecting higher prices. And how do you reject higher prices? You buy less things. So I think that receipts on average can go down. The volume of product sales can go up by sheer volume of visitors going up. Why? Because gas prices go up. You go to the discount gas station now, that gas at the pump costs a little bit more than you really want. You start to notice it. And now you're going to go out of your way to go to the Murphy's. But yeah, maybe you don't buy as much as you once did in the convenience store. Maybe you buy one less snack than before, one less drink than before, or you go to the cheaper drink, etc. Point is, you're still going out of your way more than likely to go to the cheaper option. So I think that in theory, they could benefit a lot from that. And typically they do. Correct me if I'm wrong, Andrew. They do benefit when gas prices do go up. We do.
Yeah, I mean, their CPG, which is cents per gallon, which is basically their margins. So if you think about it, just like simple economics, that there's kind of like, the way I look at it is there's kind of almost like a fixed margin, almost no matter what the cost is. And then as prices go up, there's like a variable margin that goes up as well, right? Mm-hmm. So if you notice, like they were able to maintain a healthy like 30 cent per gallon margin, even as prices went down. But if prices go up, they do have some variable margin that they can bake in there, just because, like, let's be real. If you go from paying $3 a gallon to $5 a gallon, the gas station can kind of sneak some additional margin in there. So they do benefit. Yeah. I would almost argue, though, that higher gas prices, there's something with like psyche of people. Like, it's almost like, $3.10 a gallon, someone doesn't mind doing that. Once you hit like $3.79, $4, no, that's LaCroix. But once you hit like the high threes, $4, people really start to look for saving that extra 5 cents. And Murphy's is generally cheaper, so they usually also get additional volume. That's like where they really benefit. But they do, higher prices will also allow them to have incremental margin.
Yes. All agreed. So they benefit. I think that if we see higher prices in gas, they're the less obvious play for a lot of investors. So, hey, put them on your watch list.
Who's the less obvious play?
This.
What?
This is. I thought you said no.
Gasoline prices that remain elevated in a U.S. market context. Yeah.
Well, Murphy's is not really top of mind for a lot of investors.
And then did you talk about their capital return policy? Have we talked about that?
Not yet, but go on.
Okay. So the really nice thing about these guys is basically all they care about is taking their free cash flow. They're doing some capital expenditures, and then they have some initiatives they're doing to drive top line revenue growth. And that is happening. But a lot of what they're doing is just taking their profits and buying back shares. Mm-hmm. I mean, to a point where I almost get uncomfortable with it at some time. I feel like if I remember it, the CFO said, like, we'll take on debt to just fund like the buybacks, or he said something along that line. Which like I don't know if I'd agree with that necessarily. It just depends on like what the debt interest rate is, I guess.
Yeah.
But so you're having a company that's really, I mean, I don't know if you talked about the market dynamics today, but it was pretty clear. People are getting a little bit worried, so they're buying a bunch of like staple stocks. This is a staple, right? And staple doesn't mean like it's a household name in America. Staple means like no matter what happens in the economy, people need to get gas. And so you have the ability that it's a staple company. They're just buying back their stock. Before they were buying it back at better prices, I would say, or better multiples, but they're still buying back a ton of stock. And then you have all that additional backup that Fabio was talking about.
Elemental Tomago is trying to trigger me, so I'm going to actually pwn him right now.
Don't get demonetized.
Watch this.
Even though I have no economic interest.
No, we're going to do Baba, JD, and Musa all side by side.
Well, isn't JD like 7 times the size of Musa or some shit?
No. We're not, because who cares about dollars? Like, I mean, that's irrelevant. So get ready for this. He got me. Look at this. So this comment here. Ready?
I'm ready.
Get owned. Cope and seethe. JD shares outstanding increase 0.17. Alibaba decrease 6.47. Murphy's USA decrease 22.52.
What was that, 3 years?
Now we'll go 5 years. Baba decreased just under 2%. JD increase 8%. Musa decreased 32%.
And have you talked about the other gas station play that some people
Alimentación Custa?
I don't know. I can't say it like the natives can.
The natives.
That one or Dino? Dino might be the other one, or Dino.
No, I haven't looked at Dino. I don't know much about them, but Tushcard. If you're an American and you know Circle K, that's who this is.
I forgot what they're. It's
ATD.to.
Oh, ATD.to. ATD.
I don't know what they're.
Yeah.
Look at that nice little dip, down 11%. So
that's the burrito discount.
Huge business. The valuation is actually roughly the same. So you see what happened. Murphy's USA got a multiple re-rate, and Alimentación Custa always kind of maintained its higher multiple. Deservedly so.
Mm-hmm. And I mean, because and I don't know, like, if you guys have Murphy's where you live, or if you know the dynamic. Like, if you look at the Murphy consumer, you look at the Circle K consumer. I mean, yeah, they're gas stations, but like when I go to a Murphy's, I feel a little less safe than when I go to a Circle K. But they make a lot more from in-store sales, which is higher margin.
Oh my God.
What?
He's right. Look at those
Auto Nation. Yeah.
What was it?
Chat remains undefeated. This is why I do not go out of my way to like get their ire.
They catch up though. 53. The difference is huge, but they are catching up now. It's like 10% on the 10-year. But AutoNation.
I don't even know who this is. AutoNation.
Oh, it's a car dealership.
Yeah, car dealership.
Oh.
Yeah.
I love that tone and that facial reaction.
Yeah, and it's funny, you know, this is actually something we should probably take a look into. Just because at least as a case study, it's something where like the buybacks were very aggressive, but the share price reaction to the buybacks, it's pretty much like where entirely it seems like their growth is coming from. They reduced the share count by was it 50% in 5 years, and the share price has increased 264%, and the multiple is still at 6.78.
So it's all fundamentally driven. There's been no multiple expansion.
No.
Yeah, there hasn't.
And if it is 3 years, then that's like even worse, because like if it's 3 years, it's increased the share. So there's been a multiple downgrade. So if it's been 3 years, because I put it on the 5 year because that's where Seeing Alpha like goes to, but let me do the 5 year, or sorry, 3 year. Yeah, it's been 50% in 3 years. So since 6/30/2021 is this measure. So if we go to 6, yeah, literally that I mean 54%. So if they've grown earnings, then Kale, no, you wait. Kale, I got to push you back then. Wait for credit to Lucid. No, you don't buy when credit loses, you buy before, because the market is going to catch up to that first. But good, but that's the way you think.
Good
so
point,
like,
yeah, fair point.
yeah, that's when they'll benefit, but you don't wait for that. I'm not saying I'm buying this, but I'm saying like if that's your thesis, you buy before because on a forward basis, you think that's going to happen. I'm from Michigan.
Yes, he's a Michigander.
No, someone's asking if I'm Canadian.
Yeah, yep.
So I have a lot of Canadian friends. Grew up close to the border, but not quite.
So
He's South Canadian.
So this is your play on, or your area of interest for geopolitical noise or geopolitical material risk ?
Well, there's a lot of ways to play political instability, but go on, Andrew.
Yeah, because we're trying not to get Fabio demonetized despite his efforts against me.
I don't know what I said that was funny.
I noticed, Andrew.
Okay.
Yeah, I noticed.
So, anyways, are you talking about Musa in like the staples?
Which I want to talk to you about Procter & Gamble, because you said staples. And I was going to talk about Procter & Gamble, which they said something interesting today.
Did they report today?
They reported, today.
How they do?
Business-wise, not great.
Not great.
Stock price-wise, not bad.
Bit better, Bob.
So exactly what you said is the case here. Flight to safety. Look at the multiple, not growing. And this is, you know what, Elemental? You are asking for it. You are asking for it.
Imagine if you get another stock that's in like it's only like 20% higher multiple, but it's growing like a lot in the same area. Staple.
It's a big company though. Like,
he's referring to someone.
Yeah.
Monster. Yeah, cope and seethe harder because it's down.
It's down less than the market though today, right?
Is it down today? You would think that you had a staple in here.
It's just a tad, like not crazy.
It's down 0.5%.
Oh wait, MSFT, MNST.
Yeah.
My mind secretly wants me to.
But they have been getting crushed with aluminum prices.
Yes.
Which, ironically, dude, aluminum, that chart is like a freaking AI stock last year.
Shout out to the more UK inspired people. Aluminium.
Comments good. He likes Procter & Gamble. But
okay.
yeah. What were you gonna say?
So what were you gonna say about Procter & Gamble's?
Yeah. So basically, they came out and said, well, they missed on organic sales expectations because the ability for them to increase prices and the consumer would eat it up seems to have stopped. Consumers are rejecting higher prices.
Yes.
Revenue growth has basically stalled. So you have a company that can't grow the top line. You have branded products that have increasing competition from generics. This has been like a story for a long time. It's like, the generics, the white label's coming for them. And Target has their own white label product. Walmart with the great value. Amazon, all of them have their own white labels. Kirkland from Costco. Oh my gosh, Procter & Gamble's screwed. Clorox, they're all screwed. It hasn't really happened yet, but what we're seeing now is very interesting. It's sort of like a separation between the valuation of the business, reflecting the fundamentals, and I wouldn't be touching Procter & Gamble with a 10-foot pole.
Mm-mm.
It's like a bond proxy, and I might as well just buy bonds. Like, I would never take this. I'd take bonds, preferreds, everything else for safety than this. I don't understand why it's necessarily perceived as safety. You have utilities that actually are still sort of trading at more interesting valuations if you want like a stable business with good yield on it and going to be uninterrupted cash flows from any downturn in the economy. Procter & Gamble, really? I don't know. So if you're getting news, what?
It's not cheap for
No.
I don't get it.
It's not cheap on a forward basis. It's not cheap on a current basis. It's not growing into this valuation. Like,
winners keep on winning.
Okay, great question by Omaha. And we'll talk about that in a second. Fabio would be such a great activist investor. Such a shame he missed the true calling his savage management teams in the most ruthless possible way. If I ever get to that amount of money, I would love to be an activist investor, but I got to get to that amount of money first, which is like, wow, very hard. But if we work together, this is where I launch it.
We can rule this city, Spider-Man.
We all just gonna go all in on BTI. Try to become activists, sir.
Oh my god! I don't even think if the entirety of the capital mindset community all collectivized into one, we would have enough capital.
Yeah, but like the good thing is
like 1%.
Rick's like 100%. We could take over Rick's, like not even close.
But I wouldn't join you in that. I'd be like,
I was gonna say to include BTI as well.
Rick was up today, 3%.
Really?
Well, think about it this way, Andrew. We could all buy Rick's and we can make them stop doing strip clubs.
What's the point of buying it?
I thought it's not about the money. It's about sending a message.
Yeah, I prefer it though when my message makes me money.
Well, I thought you were doing it for moral reasons. Just look at this guy. He's just like, it is about the money.
Okay.
I gave you an opportunity to destroy a heathenistic organization, and you're turning it down.
God said to help the poor, not to become them. Like, I don't...
Double down on bombshells.
Yeah, we're selling the casino and strip club business. We're going all in on bombshells. This is a restaurant concept. That's a winner.
Is bombshells like a Hooters?
Yes.
It's just not a
big Hooters.
Yeah. And then we're also gonna make them all wear like super conservative outfits that are not bombshelly at all.
Oh yeah, like we could wear them made like long dresses, and like they're covering the hair with like the stuff.
Oh no, we're so canceled.
From the 1800s.
Yeah, I was gonna say almost like a nun outfit, but then I think people would think like we're mocking Catholicism, and I don't really want to go down that path.
Oh no.
Yeah, no religious zealotry images, please.
Yeah.
So, we did get a question. What about Unilever and Nestle? So
Yes.
UL, damn, this thing. Last time I looked at it, it was like, I mean, it's way cheaper than PG. It's European PG, also not growing, but probably fairly priced for not growing, or at least actually no. If I remember correctly, I don't have it doesn't show the P. I think the P. Remember off the top of my head, it was like 18 on a forward basis before. If I had to guess, it's 18-20 right now. No, it's 16 forward.
Oh.
It's 16 forward, but it's like literally been dead money. And your entirety of your return has been through the dividend. And it barely fluctuates.
I think Nestle's the same way.
Yeah.
Shout out the Crunch Bar. underrated chocolate bars.
Oh, this is not the
Swiss
Nestle.
No.
This is the Chad Nestle.
I don't know what that is. But let's invest in that instead. Oh my god.
Malaysian Nestle.
Wait, no, let's invest in India Nestle. Are you kidding me? There's probably like,
No.
Yeah.
Kingdom would be so proud.
yeah,
Wow.
it's
Probably has room to
this
run
one.
too.
This is the one we were looking for.
Yeah, probably. Almost certainly. Yeah, there we go. That's a proper looking chart.
But yeah, 5-year, it's been dead money.
Mhm.
Cocoa prices really hurting them,
Yep.
and not as much as Hershey's though.
I don't know that chart doesn't look. Oh, did you go max?
Yeah.
'Cause that chart just didn't look right. Go to the 5-year. Oh, I guess maybe that because in mine, I mean, it's like up 8.7%, but it's
Total
that's
return.
probably just what?
Currency.
Yeah, U.S. dollar.
Oh, okay. Yeah. There's
So this
one
was
of the
in
two.
Swiss francs.
Does that mean francs have strengthened?
To the dollar.
I didn't know that.
Yeah.
And HSY.
Yep.
Is Tootsie Roll still public?
Yeah, they to my knowledge, they still are.
All right,
Who's
so let's look
acquiring
at
them?
Tootsie Roll. What are
Yeah.
they?
TR.
Wait, are they getting acquired?
No, I thought maybe. I can't keep up with all the M&A. Lisa Khan's better
Oh,
step.
Oh man.
that's why there's that pop, huh? That was an M&A discussion
Yeah.
right there.
That
Was it? Oh, I have no idea.
That's what I'm asking.
No, I have no idea. My comment's separate. Like I'm a firm believer in Lisa Khan. Like she saves us from the greedy capitalists.
Dude, it's literally the shittiest candy in the U.S. Like, let someone acquire it and just retire it.
It's the shittiest candy, still trading at an elevated multiple to peers because you have Hershey's that this multiple, it's coming up. It was funny because that was their multiple like around here. They were like at 28, and then now it's at 25 even after the crash because their margins are getting crushed because cocoa prices are going up, and then they're the cheap candy and they can't raise prices like others can.
Yeah, but like, dude, this company, if you can get some way to figure out like 6 months in advance when cocoa prices are going to come back to, because there's no way they're going to stay that elevated. Someone's going to come into that market. It might take a year or two. I mean, like, there's zero chance.
But what if the cocoa fields get caught in the crossfires?
Are we talking geopolitics?
WW111.
Oh, I hate you, Fabio. Referencing a man who doesn't understand stonks or Roman numerals.
A YouTuber who you guys might know is the most intelligent YouTuber ever to come on the platform.
No, he officially lost that title to someone else.
Oh, yeah, that's right. Khmer takes it away.
Did you see the video?
Yeah, the guy calling him out, calling him a fraud, and then he bans him immediately. Yeah.
I had to listen to that thing like 4 times in a row. I was dying laughing.
I'm gonna want a clip. I would like a clip, please.
There's a clip. We can. I mean, I don't know if we could play it.
No, we have it in the description. If everyone checks the description, I literally put mental break discussion on Khmer just to have fun, and then we get back to the serious topics. I like to incorporate that from now on. Every time we have these long streams, like mental break, like.
Yep.
You want me to play the video? I have it right here.
Does he curse out a lot?
The one guy says the F word once or twice.
Oh, yeah, that's fine. Play it.
Okay, so
while you do that, I'll pull up his lost porn.
Did he show it today?
Oh yeah,
of course.
The clown's
proud of it. Proud of it.
I gotta share my audio too, and I'm on a different account. Like just Google had me logged in, so you'll have to. I can't share it myself. You'll have to add it to the stage, is what I mean.
Oh, okay. Here you go.
All right, boys, ready? Let me know if you can't hear it or if it's too quiet.
Maybe we should ask Jinder. Hey, Jinder, go buy us a little seat at the market maker. What is it?
Yeah, that's not going to happen, bro. You're a fucking fraud moron, Khmer. You're down 50K in your portfolio. I didn't start work, bro. You're not going to keep these dividends forever.
What the heck?
What the heck? That should be a clip for the soundboard.
Wow, this guy waited his whole time just so he can say
By
that.
the way, did you notice that his smile? He was smiling, and he went from smiling to not smiling so fast.
Yeah,
Maybe we should ask Chinda. Hey, Chinda,
Smile.
Chinda, go buy us a little seat at the market maker. What is it?
Yeah, that's not going to happen, bro. You're a fucking fraud moron, Comer. You're down 50K in your portfolio. I didn't start work, bro. You're not going to get these dividends forever.
What the heck?
What the heck? Dude, part of it's like so perfect because like he doesn't want to say he's just like, what the heck? Like, to be fair, it's a pretty like fair response. Like, you're just sitting there, like he's just chilling with the boys talking.
Look,
This guy goes on.
I love it.
Yes.
How many soundboards do we have? We have we have such great soundboards in the club. Oh man! All right,
Yeah.
I wanted to share this. So while you keep talking, but this is the current state of affairs.
Oh, okay, so
Hey,
you have-
look at
let's
that.
see.
The margin actually went down a little bit.
Margin went down. Yeah,
Maybe.
yeah, because he had to sell stuff.
Yeah.
Because he's getting margin called every day, every single day. They're telling him, "Hey there, little buddy.
What
Stocks ain't doing too good."
you know what's sad but like kind of funny is like if he had this account evenly distributed amongst all the different funds, he'd probably be okay because they just like represent like kind of a shitty way to play the index. Because he's got so many funds. Like look at like there's an ExxonMobil one. Like okay. But he's so in also like all in on like the worst company to be in right now.
Yeah, he would still bleed because his margin
Right.
rate will be greater than his return rate.
Right.
But yeah, he'll bleed less fast. He's just really smart. And he literally looks at like 50K is a lot to this guy. 50K
Well, I mean,
is so much.
I mean, 50K is a lot. I mean, like you might have a big portfolio where like 50K doesn't matter, but dude, 50K is a lot. Like
50K is 50K.
you know how 50K post-tax dollars. I mean, that's like a lot of people's more. That's more than most people's annual salaries by quite a lot. Because you know you're talking state, federal, Medicare, all that stuff, fun stuff.
He won't realize he's probably made a mistake, and that all the people, myself included, that tried to tell him, "Yeah, you're choosing poverty." He won't realize it maybe until his portfolio is down to like 20.
He won't realize it until the dividend is gone and he's been
guys-
margin called so hard.
Well, the problem is that, and this is why communities, I think, like Capital Mindset, they aren't blowing up. Like we like people come and they view and they'll sub, and it's not like super fast, but because they are rallying behind a cause. Like people on YouTube, they love to have like my team. Like these guys are like, we're dividend warriors. Like it's like this like weird like I almost want to say cult, but I think it's less of a cult more than like well actually this one's like a cult. But like there's this big so he's like even if he doesn't realize it, he is so subconsciously incentivized to defend this because it's like defending your sports team. Like he will defend it to his dying breath. That's why he said something about how he loved like we'll fight for Tesla. And it's like, bro, it's a stock. It doesn't care about you.
We're fighting against the machine. Yeah. He said stuff like that. So when we first looked at him, he was down $18,000. If I actually go back and let me find an older video.
Actually, wait, what do we think happens like here? What's going to happen sooner? Another margin call, a Tesla reverse split, or like his dividends get slashed.
His dividends are going to get slashed. It's just been too soon. Like he only just started. Here, let me show you This was his portfolio before.
It was a simpler time.
When is this from?
This is from December 4th, 2023. Like, I'm trying to illustrate how quickly this dumbass has blown up his portfolio.
It was the more wholesome time.
Let's see. So
he is so silly.
So he had. Look at this.
Thanks, Peter Stocks. That is hilarious.
$76,000 account value. And what time is this? Like, when was this roughly? SoFi was at 797. Tesla's 235. This is wow.
No, this is in December 4th.
Wait, really? Tesla was 235 December 4th?
Yeah. And I can go and find a little bit before after then.
Holy shit, I didn't realize how much carnage is happening in that company this year. Stock price.
It's down 40% this year.
Holy shit.
Yeah.
Yeah, so then wow.
And this is before he puts in.
Also,
so
I don't know why.
This is now January, and he put more money in.
Oh, he did.
Yeah, he put more money in.
But he said that he doesn't fund it from his paycheck. That's what poor people do.
No. So if you see like the value difference, so this was.
What is that? Why his cost basis keeps going up? I'm assuming.
Yeah, he took money out. At this point, there was like, if you looked at his P&L statement on Charles Schwab, it shows that he withdrew like $10,000. So he had put in like 96, and he withdrew 10,000 at one point when I reviewed it. And so this is, I think, right after his withdrawal, but he still was putting more money in. So this is the beginning of him starting to use margin for his degeneracy. You can see all the stocks he had back then. And then today, this is his situation. Way less stocks, a lot of trash. He made a live stream the other day. He said, like,
wait. This isn't today.
This is today.
No, I don't think it switched then, because this still he's down.
Oh, sorry. I keep forgetting I have to switch it.
There you go.
So he has way less stocks today, and he has all that trash. He had a discussion the other day. He's like, "Oh, I want to have a talk with someone, like an intellectual talk." He said the word intellectual talk, and to say like, "Why is Tesla going down? Tesla is going down," and then he doesn't have the IQ level to understand. Well, he also banned everyone who was explaining to him what the outcome was going to be. There were a lot of people, myself included, who told him, "This is your fate. This is your destiny." And instead of saying, "Wow, why?"
Maybe they're right.
No, just asking why, how is this my destiny? Explain like your whole reasoning. He said the reverse. He's like, "Why don't you ask like how I'm doing it?" And I'm like, "Well, you're making the assumption. You all at the same time say you don't understand anything." Anyways, but that's why I find him the most entertaining character on YouTube by far and away. Strongman's going on a campaign against him, deservedly so, because I mean, all these people right here, I mean, half of the people watching him right here, they don't actually follow him because they believe in him. They follow him for literal entertainment, and they're there to make fun of him. Now, the other half, though, of the people you see in this voice chat, they're true believers. And so those people have effectively chosen poverty. And then there's a huge other portion of the people within the people who actually believe him, or maybe don't believe him, that they lie about their own holdings for internet clout. It's the weirdest thing.
It is.
It is very
boggling.
strange, very pathetic. But hey, like, they are in economically challenged circumstances and claim to, like, they claim that they have hundreds of millions of dollars, and then you find out where they actually live in real life, what cars they actually drive, and they're not. And then when they get caught, because they know people found them, they're like, I don't live according to my means of what I could live. But
that's fine if you are a multimillionaire and you drive like a Toyota 4Runner, like fine. But like when you're driving around a 20-year-old shitmobile and you say you have like hundreds of millions of dollars.
No, but it's worse because it's not someone who says I have hundreds of $millions, but I drive a shit car, a shit box. Yeah, I have hundreds of $millions and I drive a M3, BMW M3, Tesla Model S, and I forgot what the other car he said he had. The point is he says he has slightly more expensive cars. He makes the argument why he doesn't have like a Bentley or a Rolls Royce.
Oh,
but he says he has cars that he doesn't have.
Okay. Well, I guess my point is like it's okay if you're saying that and it like, but like, I'm sorry, if you have $100 million, I would have a nice car.
I don't get it just because like I've had the approach of being pretty honest. Like, yes, there are things that I will keep, like just because I would rather not be doxxed. But like if I did care about clout, I've gotten enough that like just by being honest, like the fuck. Oh well, whatever.
Well,
sorry, Fabio. I swore.
It's because you actually like try to work on yourself and you try to like improve yourself. These people don't have any desire to do that.
Yeah.
Khmer reminds me of like a communist leader where like, in communism that they say is like all the people that give you real advice eventually just get shot and killed because you tell him what he doesn't want to hear.
Yep.
I feel like that's what Khmer is.
Yes. Yeah. Because it like, and the people that he does trust, like oh man, the VIX, the talk about the VIX that I've heard
from the lion guy.
Yes. Yeah. It's just mind-bogglingly horrible and just dumb, just like factually incorrect. A person could spend like, if you're new, maybe like some more extra minutes, but like a couple seconds to like a few minutes on an Investopedia article will get you to the point of like, that's a factually incorrect statement, good sir. And whatever. Here we are.
Yeah, I mean, there's like another like Khmer Rebels group that they're also kind of silly. I spent a brief stunt with them, listening to them, and like they think the lion guy's a genius. They think he's really smart.
Oh my!
But yeah, so is that where that one guy that was yelling at him was from?
Maybe.
Yeah.
I don't know.
Yeah.
All right. I think that concludes the
mental break.
The break. Now back to the serious topics.
Geopolitics ? Or
we can do geopolitics, but getting back into private equity companies because I think waiting for Andrew to really get into that. So private equity.
Yeah, this is you guys.
What is your favorite private equity co?
Oh, it's KKR.
You don't say. I had them pulled up. Just
no. What you must be able to read my mind.
Coincidence.
Wow.
Yeah. So we can talk about what I like about them.
Mm-hmm.
So like we have to understand with private equity, there is. I think if you want to invest in private equity, you have to be okay with being uncomfortable with a couple things. One is compensation. Like these guys get paid a shitload. And you as an investor might be like, wow, these guys, like I think the current CEO, I mean, the amount of incentive compensation they have and all of that, it's a lot. The other is a lot of people don't feel comfortable with the lack of transparency. I think understanding, I've worked with, I currently am with endowment funds, like in pension funds and those kind of things work the same way, where they like this lack of transparency because it really helps them. It helps them with being able to hit their distribution targets. With that being said, I think there was some, there's some reasons to be a little bit concerned with PE. There's always like this existential threat, I think, of people thinking that they might blow up one day, and I just don't think that's going to happen. So anyways, oh yes, please do what Steve said and go year to date instead of one day.
We had the 1 day chart for a while.
Yeah, I look a little smarter there. So why I like KKR, I think out of the PE firms are the most, even more so than Blackstone. Blackstone everyone knows because they're the biggest, but these guys are the most, I don't want to say distributed, that's the wrong word. They're the most diversified in terms of strategies. So if you look, they're very geographically and strategy-wise. So they're spread out. So like there was someone who shared with me a Twitter thread that was bearish private equity, and they said, "What do I think about it?" And I said, "This just reads like they think private credit is going to blow up and have a massive downfall. If that happens, Apollo blows up, Owl blows up, KKR loses a couple of funds and they're fine." So I like that. The other thing is they're the most exposed, depending on how you feel about this. If you like exposure to Japan, which I think is like a hot thing right now because Warren Buffett, or Warren Betty, as some people like to call him, is over there.
Warren Betty.
Yeah.
I just saw that. So I don't know. We could. I mean, there's a lot of dry stuff we could get into with PE firms. But if you think rates will eventually go down a little bit, that'll be very bullish for them. Can you talk about KKR isn't marketing anything correctly to market pump their stock? I don't know what you mean.
The claim is not just KKR. The claim I saw, and there's a famous Buffett clip. Can I play it? Just to add some fuel to fire. By the way, for full disclosure, everyone, I'm not showing this to disagree with Andrew. I bought KKR. So, but Buffett has a famous clip.
Phenomena. Do 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 do. Phenomena. Do 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 do. Phenomena. Do 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 do. Building dead air. I tried. There we go.
I would not get excited about so-called alternative investments. You can get all kinds of different figures, but there's probably at least $1 trillion committed to buying businesses, and if you figure they're going to leverage them, 2 for 1 on that, you may have $3 trillion of buying power trying to buy businesses in the U.S. market, maybe something over 30 trillion now, but there's all kinds of businesses that aren't for sale and that thing. So the supply-demand situation for buying businesses privately and leveraging them up has changed dramatically from what it was 10 or 20 years ago. And I'm sure it doesn't happen with your Winnipeg operation, but we have seen a number of proposals from private equity funds where the returns are really not calculated in a manner that, they're not calculated in a manner that I would regard as honest. And so it's not something. If I were running a pension fund, I would be very careful about what was being offered to me. If you're going to have a choice in Wall Street between being a great analyst or being a great salesperson, the salesperson is the way to make it. If you can raise $10 billion in a fund and you get a 1.5% fee and you lock people up for 10 years, you and your children and your grandchildren will never have to do a thing if you are the dumbest investor in the world. But, Charlie?
Well, I think what we're doing will work more safely than what he's doing. But I wish him well.
Yeah,
Who's
Brent,
he?
you sound like a guy that I would hope would be working for a public pension fund, because frankly, most of the institutional funds, well, we had this terrible right here in Omaha, and you can get a story of what happened with our Omaha Public Schools retirement fund, and they were doing fine, and until the manager started going in a different direction, and the trustees here, perfectly decent people, and the manager done okay to that point, and it became.
They were smarter in Winnipeg than they are here.
Yeah, well,
that was pretty bad here.
It's not a fair fight, actually, usually when a bunch of public officials are listening to people who are motivated to, who really just get paid for raising the money. Everything else is gravy after that. But if you run a fund and you get even 1%, of a billion, you're getting $10 million a year coming in, and if you've got the money locked up for a long time, it's a very one-sided deal. And I told the story of asking the guy one time in the past, how in the world can you, why in the world can you ask for 2 and 20 when you really haven't got any kind of evidence that you are going to do better with the money than you do in an index fund? And he said, well, that's because I can't get 3 and 30.
What I don't like about a lot of the pension fund investment is I think they like it because they don't have to mark it down as much as it should be in the middle of the panics. I think that's a silly reason to buy something, because you're given leniency in marking it down.
Yeah, and when you commit the money, in the case of private equity often, they don't take the money, but you pay a fee on the money that you've committed. And of course, you really have to have that money to come up with it at any time. And of course, it makes their return look better if you sit there for a long time in treasury bills, which you have to hold because they can call you up and demand the money, and they don't count that. They count it in terms of getting a fee on it, but they don't count it in terms of what the so-called internal rate of return is.
Can you back that up?
What
was he saying about their IRR calculations?
So he said that the IRR calculations, when you have like the committed capital, that you have to eventually, when they do a call on the capital,
right?
Say like, okay, you got to contribute more money now. When they're doing the IRR calculations, they're doing it on the invested capital. And so they're excluding the capital that you have to park to have it there ready for them to call up. Because you presumably can't go invest that capital yourself now because you could get called at any time.
Right.
So you're going to have to park it in treasury bills. And so while that's hurting your IRR, it's not hurting their advertised IRR. And they're still collecting fees on the total committed capital.
One question I've wondered is like, so PE funds, they usually go like 7 years, right?
Mm-hmm.
And then they close the fund and a lot of times return capital to whoever wants it.
Mm-hmm.
And I get that most people probably roll it back into it.
Mm-hmm.
But wouldn't, in theory, at some point, these funds like blow up if they were as bad as these guys say?
I don't think they're saying they generate a negative IRR.
No, but they're saying it's lower than what they're stating.
Yeah. Like not lower than what they're stating. He's saying that they're getting, like, let's say 20% IRR, and I have committed capital from you $1 million. So I'm going to collect from you right now $500,000.
Right.
And I'm going to generate the IRR on the $500,000 that you given me, but you're committed at 1 million. So you're going to hold $500,000 in cash because at any time I can come in and say, "Hey, Andrew, I'm
Not
calling up."
necessarily, but go on.
Yeah, I know that you could say like there's certain time periods where we're going to start collecting more capital from you, but I'm going to calculate my IRR based off of the amount you've given me to invest in, but not the total amount. But my fees are going to be generally based off of the total committed capital, the 1 million.
Right. But so I guess my point would be most of these guys that have the assets to commit to private equity, it's not their only investment.
No.
And so generally what you have is you have a mix of alternatives and public equities, things like that. Usually what you're going to do is you have a bucket of $100 million worth of public equity investments. And these guys have at least that if they're using these PE funds. And then they go, oh, hey, here's your, you have a $10 million capital contribution. Okay, I'm going to liquidate the public funds that money's been sitting in and just move it over to my PE.
Yeah.
Generally, you don't just sit it in treasuries.
No.
That's why I just had a little bit of a. I don't think that. I mean, I know he's simplifying it because you don't want to break because I understand this, and I'm not saying I'm over here Buffett's an idiot. I know so much more than him, but I think he's simplifying it to a level to make it digestible. Where I think when you start to pull it apart, some of those things are a little more complex than what he's saying. I do agree that a lot of PE funds, it's you could have poor returns, and then you're stuck in a 2 and 20 situation where you can't withdraw capital for 7 years, or you have a B REIT situation where you can only pull out 5% of what you want to pull out.
I mean, they do have levers though that help prevent or push away any blow up.
Mm-hmm.
Oh, I'll do one better though. I say that take with what Warren Buffett says, agree with the entire thing, and say good. That means that I own a company that is convincing people and shafting them along the way. Crazy fees. It's great.
Well, the other thing that I don't think people understand these kind of things, do we want to get into this? I don't know as much about pension funds. I can speak a lot for endowment funds. If you're an endowment fund, you want to be able to distribute your capital. And we can kind of break this out. But so if a lot of endowment funds, they have distribution policies. And many of them are based on a rolling 36-month period. So let's say during 2022, 2023, your endowment went down 15%. Well, now you can't distribute the funds. So if you're a public school endowment fund and you have all these funds and the school relies on you giving out those funds for scholarships, well, now you can't distribute those. And that's a really shitty conversation to have. You don't want volatility as an endowment fund. You want the funds to be able to grow at a slight margin to your distribution amount. So usually a distribution amount is 4%. Some go up to 5%. And you want them to grow in excess of that. But what you really don't want is smooth returns. Because, and don't get me wrong, no person that manages an endowment is going to come and be like, oh yeah, I'll take smooth returns over a 2x the total return. No, I mean, they'll take a 2x. But when you're looking at private equity, you're saying I get, on paper, even if some people don't think it's true, just as good returns, and I get smoothing. I like it. And we can talk too about they're starting to put stuff on their balance sheet too as KKR, which tells me also that they're really telling you we're actually really confident in what we do. That actually speaks more about their actual individual funds.
Yeah. That's what's interesting about KKR versus maybe others. I think that maybe a lot of what Buffett is saying is also more so, I think, more prevalent in some funds over others.
Well, and he's also talking to a person as a manager of a pension fund, not as an investor into a private equity company. Just remember that.
Yeah. No, I'm saying take everything you said is true, and then you still come away saying, damn, I get to own a company that is convincing all these people to put all this capital in there, and we win no matter what. Great. More. And they have no problems raising capital. Good.
Winner. Winner.
It's a transfer of wealth, as they say.
Well, yeah, and it's worked out well for these companies. I mean, you can look at the 5-year return on this guy too. I mean, it's been good, and the return since inception.
Oh, Jesus!
What?
What was just shared behind the scenes?
Why are you gatekeeping this?
I'm not.
I didn't.
Why are you gatekeeping this, Bacon?
Whoa! I am being gaslit in real time here, chat. Help me!
Help me! No one can help you.
No one can.
All right, Dan.
Is Dan Weston in the chat?
Dude, Dan abandoned us. He didn't want to see what's happening. Breaking. Tesla has dropped all Model Y trim prices in the US by $2,000. Damn. I'm telling you right now. Best electric car for the money. At this price now, there's no reason to get the other ones.
No, I mean,
no reason.
The thing that's bad is this is just signaling.
Yeah.
No demand.
Oh yeah.
Dan said, "I'll take over your stream."
Oh, come on, Dan. No, come on. You want the heat? Yeah, no, come on. You have the link. Oh, and Dan's been
He's been in the pina coladas.
Yeah, we get interesting Dan. Dan's gonna be like, fuck you.
We're about to get demonetized hard.
It's been. That's why I dropped one of my own.
Does demonetization matter for your live stream in terms of getting people to watch the live stream?
No. And we don't actually get demonetized. We don't do anything. Yeah. You really?
Yeah.
Yeah, of course. You're always welcome.
So I don't know if you had any comments on KKR, but for anyone that doesn't know, KKR has been my largest holding for a long time.
Way to brag.
No, you and Fuhat.
Unlike, okay, Fuhat thinks he is the PE overlord. Okay, he learned everything he knows from me.
Oof.
Because of me. No, he actually does a lot of work in this, and he actually probably understands individual products better than I do now. But
yeah, he was able to get Leo interested in something. So credit to Fuhat, like for whatever that's worth, like for all the stuff that he gets rightly and wrongly in some cases.
Oh wow, look at this. So after the federal tax credit, you get Model Y long range for $40,000. I'm telling you, for the money, best one. $43,000 for the performance. Dude, that's like, you could get a hybrid or you could just get an electric car. It's all the same now. Now, this is not good for you Tesla shareholders.
No. Let it fall. Let it fall more. Let it fall more.
That's a separate discussion. Okay. I'm having the discussion of if you're looking to buy a car and you were looking for an electric car. I now am a gas guzzler and I do not care for this.
Imagine if it gets to the price of a Dodge Dart. Wouldn't that be hilarious?
Yeah.
Well, what price do you think this will level off at? Because how long have they been cutting prices for? Wasn't this a $70,000 car at one point?
The performance was, yes.
Yeah.
Oh. That's a big cut.
And the Model S Plaid was like $100-something thousand car. Yeah, now it's like at a $70,000 or $80,000 car now.
Dude, I'm a little upset I didn't hold my Tesla puts longer. Dude, if we held the Perry puts longer, of course, we can't blame ourselves because like it had nothing to do with geopolitical events, and I think that's partially also driving a lot of the weakness because it was actually rallying until that happened. But that, and then if I held my Tesla put.
Yeah. Oh, by the way, if everyone's enjoying the stream, this is a good reminder that you can also show me that you like the stream by on Twitter, hitting the heart button, on YouTube, hitting the like button. We have over 150 people in here right now. So good to see you guys here. All right. But yeah, back to this. So honestly, as a consumer, this is great. Oh, I didn't get into the optimistic scenario for energy and the United States, driving cars, etc. Maybe I'm disconnected, but I think that the next 5 or so years is going to be defined by the rise of hybrid. So that's going to drastically increase gas per miles or gas mileage, and the expenditure by the household on energy, particularly gasoline, should go down, which is still bullish then for everything else, because we know that energy prices at the pump do have a let's call it palpable detraction from other expenditure, particularly in discretionary spending. So that's my optimistic view on things. And I don't think that we're going electric. I think that electric's still kind of just some people will go for it. And I'm gonna tell you, it's like a different experience. I mean, many of the audience probably knows this. Oh no.
Here he is.
All right.
Is that a Four Loko?
Me. Why?
Is that a Four Loko? Is that what I saw?
It's beer.
Oh, it looked like a longer can at first, and I was like, "Oh, Dan's really getting into it."
It was a good night. I don't know.
Very nice.
What were you talking about? Tesla drop prices?
It's Friday.
Well,
I'll be right back.
I was gonna just say to Fabio, the best car company in the world said this 2 years ago, right?
Yes, they did.
So when Toyota says this is where cars are going, Toyota kind of, you should probably listen to them. Which, by the way, that car company is going to continue to do well. I have never seen a continent have as much mind share of a product as Africa does with Toyota cars. It is insane.
I don't think people understood, like, most car companies are not global car companies. They're more regional. We just assume because we see them all in the US and Europe, that's not a worldwide car company. Oh,
right. But like, I don't know if I've talked about this before. In my role, I help people from different countries in Africa buy cars. I can't say for South Africa, but I don't know. I've never actually had anyone from there, but everyone else from the other African countries I've dealt with, if you try to get them to buy anything other than a Toyota, they'll just be like, no, I will not touch this. Like, oh, here's a nice Volkswagen. No. All right, well.
I didn't talk about this yesterday. I totally forgot. There was a lawsuit that was going on between Tesla and a family of someone that got killed in a Tesla that was autonomous driving. So Tesla just settled after some of the testimony got released, and they were interviewing engineers that worked on Tesla's FSD system, and it was not good. I think they definitely wanted to can that. Like I think some of it was like the software isn't as advanced as you think, and basically the car just follows the painted lines on the road. One of the engineers, I think, in the testimony said, like, it's very basic how they designed the system originally. That explains why when it rains heavily, the system doesn't work. It has to see painted lines so it can follow them. I think you said, like, even if autonomous driving does become a thing, how do you know the states won't require they could require LiDAR.
They're going to. They're 100% going to. That's what I don't understand, like, the Tesla fanboys, in the sense, like, they follow it fervently and they don't listen to reason, in my opinion, because it doesn't matter if it works to the extent that they think it works. Regulators can just come in and say, no, these are the rules, period. Because it's even better. And so we don't care that it's too expensive right now. These are the rules. Boom. It has to be equipped with LiDAR. Now you have Tesla in an interesting predicament. Hey, you sold all those FSD upgrades. What's going to happen to all those people? Oof. Either you have pissed off customers, refunds, a little bit of something else.
Well, they already did piss off the original FSD people, right? because they bought for quite a lot of money, and like the thought was gonna be, oh, like you pay $3,000 a day for a one-time membership, and then it's gonna be $1,000 a month. Then it'll go up to 2,000, 5,000. Well, now they dropped it to $99 a month, and those people are pissed.
Oh, it's $99 a month.
Yeah.
Yep.
Well, yeah, I never paid for the FSD upgrade from the get-go. I only did the subscription when I used it.
Mm.
It was at the time when I was doing it, it was $200 a month. Because I did the math. I was like, no, it makes no sense. Why would I put?
Yeah.
They were charging 12 grand for the 6 grand for the half, like the advanced autopilot, and then 12 grand for the FSD beta. And you were like, okay, or you could pay $200 a month for FSD beta.
Yeah. I don't know. This
See,
goes
now
back. It goes back to like I'll say this, like I don't see why people hate on Tesla as a company. That's weird, but like Tesla as an investment with the cult of people behind it as an investment, yeah, go ahead and hate on that because that's idiotic in my opinion. The company itself, it's a car company that I think has done a lot of like pretty cool things. I know Dan might disagree with me here, but
kill him, Dan. Get him. Get him.
I think Teslas are poorly made cars. That are, I don't like. They make very weird choices that, like the panel gaps. What the hell?
Oh, no. Fight.
Oh, is it? Oh my god, this is like really close.
I know, right? You're like, oh, I didn't want to see myself in this much detail.
I don't know. I mean, people can enjoy the cars, I suppose, but I think they're poorly made. Like they still have problems with their paint, and the warranty issues are only getting worse, which I kind of expected.
But like, do you really, for example, do you give a shit about Rivian or Lucid, like the actual companies, in terms of like people driving their cars or anything?
Well, it's funny when people are like, "Oh, Rivians are really cool cars, great reviews and stuff." It's like, well, yeah, you're buying a car that costs like 40 grand more than what you paid for it.
Right.
Like, of course, it's amazing. Like, you're getting a great deal.
But my point is just like, who gives a shit when another person wants to pay for a car? If they want to do that, that's fine. And I think the cars they make, I mean, like the technology, I think is kind of cool that they can run all electric. But I think the cult of Tesla is what's just like so stupid. And trust me, like we're on this. I went short. I didn't short them. I went short on Tesla, meaning
I got a crack out of like they're like franchises are dead, like car franchises. Tesla killed them. I'm like, okay, you're crazy. It's not true. And now we're seeing the results of not having franchises with Tesla. They have to hold all those cars. They're not selling. So
yeah,
that's their inventory. Their service techs for fixing stuff when these cars break, which people are really not happy about online. Their service centers are not getting like well reviewed. So you can't blame the franchise like Ford could or something. Say, oh, it's just that one franchise. He's a jerk.
right.
Not us, but
yeah, you can't export or export the responsibility onto your franchisee. It has to be fully owned by you. They also, you made a really good point. They don't own their own financing. So every time you see like buy a Ford 0% APR for the first 72 months, can't do that with Tesla.
I mean, unless the bank they work with allows them, which is not their call. I mean,
do they have a special financing deal? Because they're buying points to that.
Someone had kept saying that they could offer finance. I mean, maybe they crack an agreement with whoever's doing it for them, but yeah, they're not in charge of it. So,
but I guess what I'm saying is like, yeah, I'm sure they have a bank that they partner with to offer financing, but can they get you special financing? Can they get you 0% for 72 months? Or let's see, I'm going to try to order a Model S and see what it says about financing. But not that we need to get too far down this rabbit hole. What are we looking
the thing people probably forget too is with a larger fleet of cars.
What is this?
That are, oh no. What the hell?
Is this a Tesla autopilot?
The Tesla stopped on the highway almost.
Compilation.
Fabio's like we're like what's the one Simpsons where you have like the two monkeys like fighting and they're like
Oh god.
all cheering it on.
Just for the background.
I don't even know what we're fighting about, but
I don't either. We're on the same side.
Just
so so just like Tesla fleet, people got to remember they're getting bigger and bigger and bigger. So service costs are going up. Also, the age of the car fleet is now getting older. So those service costs keep increasing. They're going to be just like GM and Ford very soon as far as those costs. And they have to carry that burden. They don't have a franchise system. So,
dude, 100%. Whoever was the QC on that Cybertruck that got like the windows broken got fired, right?
Yeah. Oh no! Look at this. Oh my god!
Can I just say the other thing too? Like, am I the only one that finds like all the Tesla talk kind of boring? Like,
yay! Me too.
People talk about Tesla all the time. I'm like, it's cars. Ooh,
Mm-hmm.
ooh,
oh, double kill.
That wasn't a Tesla though, was it? That veered off,
or was it?
I'm not sure. Oh boy!
Well, that just looked like someone recklessly driving.
Yeah.
Very nice. Got some
the problem happened here too. So the barriers, like see the steel barriers, any street has, like in that right there. Those are not designed for the weight of electric vehicles. So there's been a few occurrences of electric vehicles hitting those barriers. They go right through them, and people fly off a bridge.
Are electric vehicles heavier than?
Yeah.
Yes. Yeah.
But like that's pretty insane because I would imagine like most electric vehicles are like an SUV or a car, like a sedan, and these are designed for like trucks. I would think, right?
The barriers, it depends. There's if it's more of a fall, they might be like bigger, but I mean they're not designed for EVs. The barriers, like anywhere you see in these photos.
Yeah. I didn't know. I would have thought EVs are lighter. I don't know anything.
Oh, he's going achieve greatness.
Oh,
fulfill your destiny. Boom.
Oh, I've seen that. Yeah.
The crash test. All right.
It went right into the bus.
That's like the final crash test they do before they roll it out.
Yeah, I don't.
What is the
think
other
they do it
side?
in a public setting. Maybe I'm wrong about these things, but
oh my god,
that sucks.
But we'll see. I mean,
so yeah, I'm not investing in it here, but
I think there's going to be multiple players. I said this yesterday, like the robot humanoid thesis. I think you got like 3 identified camps, and there's going to probably be a 4th player at some point. But you've got Apple, NVIDIA, and Tesla, right? That are kind of the identified players trying to get in this humanoid robots. So that's not going to be easy haul for Tesla against those big hitters. And then I'm assuming there's going to be a 4th player at some point. Could be like Volkswagen, BMW, or something, or a Chinese company.
Well, he really wanted to work out.
Oh, I need to get to the gym. The gym's closed. No, it's not.
The other thing, can I say something that you all will disagree with? And this is a hot take that Elon Musk does deserve that pay package.
Did you say Mersh?
Elon Musk deserves the pay package, in my opinion.
Yeah, but by the rules, yes. I mean, if I were a shareholder, I'd harumph. But that
I think the issue wasn't the amount of money; it was the independence of the board. Yeah. Is why it got canned, and they haven't resolved that. The board is essentially the same. It's his insiders. Well, his brother's gone from it, I think. So there's that part
of the non-Tesla, but.
I mean, I'm not a Tesla. I mean, yeah, they have every right to prove it now.
But my thing is like, because when I first read it, I thought it was like he's like trying to get a $50 billion pay package now, and what I found out was he just was given an incentive package and he hit the incentives to get paid $50 billion, and I think that's insane not to let him have it. Like that'd be like you'd be like, hey Andrew, I have some sales targets for my top salesmen. If you hit them, I'll pay you $50 million. I go and my sales targets make the company $1 billion. You're like, awesome, here's your $50 million. And someone's like, I don't want that. I'm going to sue so you don't get paid for hitting your targets. I think that's kind of crazy.
It's a boat.
I have seen some pretty cool videos because my understanding is like they aren't as reliant as ICE car. Like an ICE car can get flooded and they can't. So there's been some videos I've seen of them driving through water. I don't know if anything could happen with their batteries because of doing that, but ooh.
Boom.
Okay,
I mean, you
this
could
is
with
just car crashes. That wasn't a Tesla.
This is not meant to be negative specific to Tesla. It's just a compilation of Teslas involved in car crashes, irrespective if it's their fault or not.
Oh, okay.
Yeah.
I would just argue like this idea that I listened to a podcast today. That what was it? The B2 was it B2? I think they were talking about robo taxis, and like the way these people describe it, I'm like, I don't understand how you think this is going to happen. That you're going to push a button, go to bed, and then your car is going to leave and go drive around, and then come back to you when you wake up, and then there'll be money from something, and you'll have money in your account after.
Especially at those hours. Like,
no.
Yeah.
I can see someone mentioned in my comments like having defined robo vehicles that would look like Volkswagen bus or vans, and then you have defined areas where they have like maybe they make the lines more well marked. Let's say for the robo taxi system, there's defined paths that they drive downtown, sporting events, from the airport, which sounds like a bus, right?
Yes.
But that's a reality that you could see implemented. But Tesla's not doing that.
Isn't that kind of like what Waymo's doing? Is like they're going city by city and more mapping each city out. And I don't know how well Waymo's doing.
And they do very well-defined mapping. They keep them in certain areas only. And I think like too, if it's got like cameras and LiDAR, you'd want bigger signs. Maybe you need to add more defined lines to the road where they're driving, stuff like that. But
total, can we do a quick change of topics? Is that there was another industry I wanted to point out that did really well today.
Which one?
Let me just double check to make sure it wasn't just the two stocks I hold in this industry.
Well, hey, no, that'd be a compliment to you. Can I guess?
No, it was industry. It was industry.
Okay. Industry that you hold. Real estate.
No.
Because that did go.
Wow.
Insurance.
Yeah.
AJG, and it's the other one you hold. Oh, ACIC. Yeah.
So Arthur J. Gallagher and like I just looked up Progressive was up like almost 2.5% today. Maybe they reported. Did they report or something? Because that's a lot.
United Health recently did, but
they're up today too, 1.5%. Everyone. So I think it's a combination of higher for longer, maybe.
They did.
And then, I don't know outside of that what would be bullish for the industry as a whole. I'm hearing hard markets still, which is good for both ACIC and Arthur J. Gallagher. That's why I was like, well, maybe it's because there's going to be a hard market for a long time. But, yeah.
Dan?
Somebody stole something that was created in Capital Mindset.
Uh-oh.
Go to Jeremy Lefebvre's Twitter.
Oh, no.
Oh, no.
I think you know.
Wait, what did he do?
It was 4 hours ago. It should be
2 hours.
There it is.
Oh, yeah.
That looked familiar to you? Oh.
It's funny because I can't remember the person's name, but yeah.
Yeah, that was created in Capital Mindset.
Yep.
A thief.
Yep.
Well, to be fair, this is like like he could have had someone in his Discord make this too. Although
No,
It's the exact
no.
same hoodie.
It's the
And
exact thing.
Yeah,
yeah.
Dude, he so stole that.
yeah, you did.
Look at him.
Oh well.
Yeah, Strongman stole it from CM, and
Yep.
then
Jeremy
he stole
stole
it from
Yeah.
Strongman.
Whoever created it probably stole it from whoever his software created it.
Turtles and thieves all the way down.
When people
by
like,
the way-
oh, you stole that meme, it's like, did I steal it? Like, aren't they?
I'll
all
take the
stolen?
hit. I'll take the hit
Makers?
next week for everyone. I hope Meta crashes.
Ooh.
I hope Meta gets hit so hard.
Ooh.
Hey, you're gonna just stand there, take it like a champ
So-
if it does happen.
Take it like a champ.
Take it like a champ.
Well, let me see, because all you need is for like, no, just have Meta be flat and you'll be fine if Tesla tanks.
Oh, what's that guy who's like so emotional about Tesla? What's his name?
Which one?
Squarespace?
Yeah, what's his Square?
I think it's like Squarespace or something like that. Squawk Space, something like that.
I think I know who you're talking about.
Let me see. I think I follow him because I always forget the name of the dude. Like, hey, Pedro Sexena.
School. Is it school? Does he spell it weird?
Trying to look for it.
Let me see. I think, do I follow him? Maybe I don't. Let me see. I actually might have muted.
Oh,
Oh, Chipotle?
Oh, I remember this.
Tijuana
What?
Flat. You guys don't know Tijuana Flats. It's Florida.
Oh no, I was thinking of the one that someone
It's-
told you about, the UK one.
They had them. I think they
Oh,
had
yeah.
them in North Carolina when I lived there. Let me just. I'll find it. The guy's name. All you gotta do is Google $ Tesla and you'll find it eventually.
I seriously want to go test drive one of those hybrid Camrys coming out this fall. I'm not even interested in buying a new car, but I just want to go see what they are, how they drive. But they're coming this fall. 600 miles per tank of gas is what they're saying.
Wait, Fabio, on Seeking Alpha, can you pull up a market cap stock or a market cap chart?
Yeah. Who?
I think today was pull up ExxonMobil.
Squawk Square is his name.
Can you compare it to another one?
Yep.
Compare it to
Who do you
Tesla?
That's dirty, Andrew.
Go back like 5 years or 3 years. Wait, oh, this just is change over time. It's not total market cap.
No, I got you.
Yeah, he's got it. Yeah, preset diluted
Oh,
or share dilution.
that's just return though.
Mhm.
Oh, I was saying like total market cap,
Yeah, this is market cap.
but that's
Oh,
like
I have
market
to
cap.
change it to linear.
I think if you okay,
Bacon, I wish I'd bought
go to
more
5
Exxon.
days. I think ExxonMobil passed Tesla today again.
It's
bought-
it's okay.
I bought such a little bit of
Oh,
Exxon
maybe
in
not.
January. It's like,
Maybe just intraday it did, and then Tesla recovered.
It's okay, Dan. At least you're still
Oh,
winning.
I look stupid now.
No.
kinda thought-
Your point though is that it's catching up.
Yeah.
I kind of
Yeah.
thought energy would rebound because it didn't do well last year.
Yeah. Like I even made a prediction on your channel, and I exited too soon in hindsight.
But guys, if something happens, it's just getting started.
I worry about second order effects though. Like you did mention a good point, and Dan also you've mentioned the point in the past as well. Like hybrids are probably going to come back with a vengeance, and they're probably going to be pretty strong.
That's not right now though.
No, fair.
Right now, Americans are not going out in droves to buy a new car.
Are
And-
you advocating I do a momentum thing here, Fabio?
No. So hear this out. We just saw data come out. Someone shared with me within the club data from automakers and car dealerships, new car sales are falling like a rock.
Mhm.
That makes sense. Think
Yeah.
about this logically. Where are
Yeah.
rates at? How expensive is it to buy a new car?
Mhm.
Why would you?
Customers are drifting prices. Yep. Yep.
Yes. And so people are keeping their cars for a little bit longer. That means no hybrids right now. I agree with everyone that hybrids are the way to go. And that's where my optimistic approach saying United States isn't doomed if something happens. We have a prolonged kind of oil conflict because now we have two countries that are major oil producers that are kind of getting, their supplies like getting thrown out a little bit, right?
Mhm.
For the most part, we're trying to our best to almost reject them. So then that presumes that gas prices at the pump are going to be higher. But I think in the next 5 or so years, we're going to see the rise over time of hybrids. Now, if gas prices get high enough, now you can pass that hurdle rate of where the average American, it becomes too expensive for them to keep the regular gas car and they want to go hybrid. And then now the extra interest payments, it will make sense. Maybe even electric to an extent too. But short term, oil companies, man. What are you talking about?
Well, I think, I mean, I think it's a little more complex than that too. Depends on like production.
Yeah.
Because
can we get production that high that quickly?
That is the good point because shale.
Daddy Trump says so.
Shale producers have been getting more concentrated.
No, I'm saying we find out Monday or 2 weeks from now. We find out a certain sand fight in the sand playground is happening between two children, and they get really rough with each other. That might make it so that the candy costs a lot more at the cafeteria. And yes, the teacher, the big teacher, will get mad maybe and get a little upset because the classroom now they can't get enough candy because the two kids are fighting in the sand. So, well, the guy selling the candy in that short period of time before the teacher can drive to the store and get some more candy, it's going to have a good time passing around that candy, making a quick buck. So I would believe they would trade higher.
But like, and I just want to make it clear, there's some other things like OPEC could come out and be like, because if you remember, OPEC has done several, I mean, they have capacity if they want to turn it on. OPEC Plus. They could come out tomorrow or at their next meeting, whenever it is, and be like, we're increasing production by 1.5 million barrels per day.
The caution though is that like OPEC, especially even the kingdom, what they say and what they end up doing, like that. I'm not saying you're doing this, but like just be careful for people watching not to just be headline focused. Like it does take time for them to ramp up or slow down production.
Sure.
Even the kingdom. Yeah.
But also you have like there's so many things. You have, I think Biden's administration came out and said that they were not refilling the SPR, the Special Petroleum Reserve. I don't know if they're using it again. I hope they're not as an American. But I don't know. I think they're at the very least not refilling it, which like they're trying to do whatever they can to like keep inflation down, which is hilarious. But
I think.
So, are you going long energy?
No.
Oh.
Yeah.
Do as I say, not as I do.
Yeah. Dan's winning. Congratulations, Dan.
I really didn't buy that much Exxon.
True, but a win's a win.
I think Exxon's great. Just hold it forever, but
Exxon is
out of all the oil companies, it probably is closest, or energy companies, it is one of the closest that fits that bill.
They're legacy oil company, Bacon. Legacy oil.
You like it more than Chevron?
I hate that term. I swear to God. Legacy.
Look at that.
Chevron may be interesting, like because they and someone way earlier in the live chat mentioned the Venezuela thing, which like privately also like behind the scenes we've talked about that too. That Chevron is exposed to Venezuelan crude, but like probably not that much.
This
and
may sound
Venezuela.
dumb. I liked what Exxon was saying about like non-oil like energy projects they were working on
Yeah.
more than Chevron.
Yes.
So I understand that oil is what they do, but
Mhm.
I think Exxon's more forward thinking right now about
Yeah.
like carbon capture technology and alternative energy sources. So
They're
they
an
would be my
energy
choice for
company.
now. This can all change. I mean,
Yeah.
they have
Yeah.
huge resources.
Yeah.
Obviously,
But
they can acquire
I-
businesses.
Yeah, and I just don't feel I need a exposure to Exxon because I have a pretty big allocation to another energy company. I don't want to like over allocate myself to energy.
Yeah. Oh, that's fair. That's fair. But
If
yeah,
you guys know my portfolio, there was a joke in there, but I guess no one does. Okay, moving
I
on.
I
Joke didn't
I
land.
caught it. I caught it, Andrew.
I
I'm
caught it
sorry. I
too,
didn't
but
know.
it's just not funny.
Yeah, I didn't know if I was supposed to
No
laugh.
I get
We
it.
will laugh at the reaction.
I get it, but your joke is fairly valid.
Trash joke.
I caught that one.
You got a
Just
whole week
inside
on
jokes.
vacation to work on your jokes, so
Oof.
you'll be good.
So we have energy drinks.
Oh yeah, yeah. Fabio,
Yeah, well, you'll have
please,
to do it
no.
without Andrew because that was offensive.
No, I want the energy drink that I want to go down lower, please.
You
No,
got
Fabio.
you buying call options on Celsius?
Oh, it's
Andrew?
not doing well, is it? Oh,
Yeah.
No, I am not.
What about
That
Monster?
premium already.
I warned you people.
Whoa,
Be
whoa, whoa!
careful.
What do you mean by you people?
What do you
No,
mean, you people?
I guess. Well, I mean, and I think all that time was
Jesus.
wow, no way.
Wow, and Andrew was like, "I'd watch out. This thing trades at the valuation of CrowdStrike."
Oh my god, I didn't know it dropped that much.
Yeah, that's why WY is like, Celsius.
Damn.
Wow, just throwing people behind the scenes under the bus. Oof.
Yeah, it's an ambiguous name.
Wow, that thing is. Well, I mean, I guess I'm sure you're still pretty positive year to date. So, like, if you've been
Yeah.
16%.
Look
Okay.
at that, 16%. That's trash. That's garbage.
Like you can be bullish on a
I'd say
thesis,
that.
but then the stock can get ahead of itself.
Mhm.
Like Micron ripped to like 125 when I was holding contracts, and I'm like, I still think it's like 100. I think it's worth more than that, but it ran so fast.
Yeah.
So it's like, get out.
Yeah, if you
My-
held contracts, might as well.
My favorite thing was I was like,
Options
I
is
remember-
different consideration than the stock.
Very.
Different thought process. So,
Very.
yeah.
I don't know what that means.
You're
But I need to like that. Oh, like the angels.
What do you have to say about this, Dan? Because like, how do you feel that they did that? Did they
they?
get out?
Oof.
They're traders. Don't who?
Are you
doesn't
sure they
matter.
did? Chris Camillo is very into Tesla right now. They are in
they-
Celsius too.
He was, but let's see. Like their Celsius video. If I look at the timing, I think he was okay. And you
No,
have to
they
understand.
were in very early. So everything they talk about is after the fact now because they were getting front run. They used to propose stuff on their channel before they were going to buy it. And then they found out they were getting front run by hedge funds, I think. So now he talks about after the fact stuff. But like you should, I always say this when people like will talk like because I put dumb money on my channel and stuff, and it's like you should be inspired by them, but you shouldn't like copy them.
No.
But just take
So-
inspiration from what they put out to the public because I think it's a net positive to follow them. But
I still have difficulty.
Andrew
with
hates them
Chris.
so much. I know it.
Bro. The board
They're very,
apes in
very
the,
successful
the
investors, dude. Like very successful.
the board apes and ApeCoin and all that they're pushing. I was kind of like, I don't know.
But like Chris
Felt to
Camillo, like,
me-
he does videos. Like I will say the most positive thing he teaches people is risk, but like adjusted risk, like calculated risk in investing. So he will identify an investment that has a risk and he will go after it. But like there's thought behind it. It's not just like buying something like SoFi because everyone tells you it's going to replace JPM. Like there's the thought process. He considers the risk of the up and the downside on investments. I think that part of his process.
I mean,
and he's like, look, when you're young, like you don't have a lot of you need to take risks, right, to create return. But
the problem. So here, I'll be very clear. I listened to Dumb Money. Actually, I think I listened to all their lives for like idea generation to see what they're talking about. I get wary about some of the things. Like I got wary about the ApeCoin stuff that they pushed. I get wary about that kind of. Chris is right that you need to take big risks. The thing a lot of people don't know behind, and people might think they know this, but there's a calculated risk that you have to take. And I feel like I'm gonna call it my boy Druckenmiller, shorting the pound. He talks about it. He's like, it was a calculated risk because if we're wrong, we lose 30%. If we're right, we 4x. Like, I don't think people are doing that kind of calculation. So
no, I think that's the way, and it's hard to, you can't, like we say calculated risk, right? But it's not exactly quantifiable. There's an art to this.
Give Marquise a free membership.
But you're winning over. You're making friends in high places, Marquise.
I said,
but
Marquise,
it's just like I don't know. I just like the potential of the downside or the potential of the upside warrants the risk I'm taking of the underperformance of it, of what I'm doing. And it's hard. You have to like run through a specific example almost of something you looked at. Like buying Disney at 80. But it doesn't always have to be something at 4 or 5x's. It's really any investment.
True.
But,
All right,
I was very certain about Perion.
Yeah, we should have.
Oh, Perry.
I saw a very minimal loss risk on that.
Same.
Like
I want to see.
My question was how long it would take to play out.
Yes.
But I was pretty like 90% sure what you said was going to happen.
We have to find the
time
next
frame
short.
of the question, but
the next short.
The next short. I got a taste for blood. I like dunking.
I'm a patient man. I just wait.
I feel like it's hard when you have a market like this where everything's going down. When the market turns, then everything goes up.
Yeah, no. We don't want, but just like we'll be searching for that next one.
Yeah.
It'll just click like a light bulb.
Yeah. We'll just come across it. Some shit go.
I told you one that I have an idea on already. Financial.
Fabio doesn't remember.
Wait.
Still hasn't filed their financials.
Oh no, not that one. The short interest is so high. Like the vol would be like against you. Like
if we would have done it when I talked about it, it'd be down already by 15%.
But Delta would have to do so much work to offset that vol, though. Like,
has not set the.
But well, I don't think puts are. Let's see.
Yeah, because like I'm assuming we're talking buying puts for a directional perspective.
Yeah.
Like I worry about the vol because like the short interest is high, vol is high. Like yes, it could go higher, sure, but
yeah, but if you looked at when we were talking about, you were catching it after a short squeeze.
Yeah, it's the obvious one that I'm not joining in.
B. Riley.
Yeah, B. Riley.
B. Riley Financial.
It's a crap show. It's been a crap show. Like short seller Mark Cajodes has been pounding the table on this one, but take that for what it's worth.
I still don't think they filed their 10K.
No, I don't think so
either. They got into disagreements with their auditors, basically fired their auditors mid-audit.
Yeah. Great signs, right?
There's one co that I'll put in the private chat. We can maybe discuss this off camera.
You know, it's kind of funny though. Remember when we did the Rivian video, Bacon?
Oh yeah.
So it was $12, and I'm like, I seriously don't think what they're saying is going to happen this year. And here we are. It's $8 now. So, I have a lot of doubt that they're going to execute what they said they're going to do, but I don't know.
Trying to find. B. Riley announces notification of delinquency with NASDAQ.
Yeah. Not great, Bob.
What's the yield on their preferreds right now? Riley P.
Not great, Bob.
I'm sure the yield's really great.
Well, yes, but like at some point with the yield, you like if it's so high, like questions must be asked.
That's what I'm saying. I'm wondering how high it is. It's 11%, more or less.
Oh, that would
Not
be an
bad.
interesting way to express it, if you could. But
Wait a minute. What do you want to do with this, Fabio? What do you think?
that look, the Grinch thought of a plan.
Because I don't see why this business has any reason to exist. Like, period.
Painful.
This is it's like I've been thinking about this for a while.
So,
yeah,
this is literally like Blockbuster Video.
Yes,
and certain companies have basically indicated in they don't want to deal with this company. They're forced to at this point just to push inventory, but like against their will almost.
Yeah.
But
Build-A-Bear is a more attractive company from a long perspective than this.
Yes, and so I'm buying them. Structurally challenged shitco.
Flawed business.
Quite.
Flawed business.
Yeah.
Dan's like, I like it. I
thought about it.
You thought about it too? Okay, let's do it.
The only problem, I don't
Dan.
know. Thought about it actually.
We'll jump in together, but we'll wait. Our time will come.
Yeah.
We need to sleep on this. I'm looking at some prefs because you just reminded me. I revisited those Brookfield prefs we looked at. Look at the yield now. Well, it's back to like 11 something.
What's the ticker?
BPYPM.
Well, yeah, because higher for longer fucks this company.
Hey, for any of you grandpas out there, not saying that in a mean way, we have some out there that are in the older gen and would like some yield. So there's some pretty good prefs right now in some of the REITs, cumulative prefs.
Ooh.
Just not financial advice, but I'm just going to point you in the right direction. There's some industrial pain out there where the underlying real estate seems pretty sound, but they're going through a temporary correction because industrial real estate was really hot. You guys know which one I'm talking about, Rexford Realty Trust. So not going long the comments, going long the prefs. So you'll get like 7-8% yield now in the prefs, and it's still cumulative on a REIT. So I think that's an interesting. Well, for the Khmer people, that's like that's low yield.
Nothing.
Yeah, that's nothing. It's like they're shooting for like 70% yield, so 10 times that.
Let's ignore.
I saw one of them comment about the Steve Bavaria book for the first time, which I was wondering if any of them were going to reference it. So I saw somebody like yesterday mention Income Factory. So
Income Factory is nearly an abomination if it's misinterpreted.
Oh, you did get it. I never bothered to read it, but
yeah,
I can't. It just sounds so wrong. His whole thesis on investing.
But he never would have advocated for these things. These are abominations.
Yeah, he would have like those income, like it's real companies and real dividends still.
Yeah,
what he was advocating. So
yeah, like there's an argument to be made for if you're trying to go for yield. Well, I'm staying away from the preferreds, but like going along commons, there's some BDCs.
I'm looking around Mark Cahote's Twitter and him just like shitting on B. Riley.
Oh yeah, no, it's legendary. He does it regularly. You'll see like the random odd like long post about what he's like long in, but he craps on B Riley like relentlessly.
I love that.
He says, while we wait for a 10K, I, for one, am glad Riley took the time to issue a press release about a capital investment into a New Jersey recycling facility that was already a subsidiary of B. Riley as of FY 2022.
Jeez.
I can see this company being a zero, by the way, easily.
Yeah. Double checking Fabio because someone's asking on the Rexford Industrial Realty.
Yeah, REXR.
Yeah.
And
Yep.
I just want to say there's no more analyst coverage on B. Riley. All the analysts have pulled their coverage off of it. So
it's funny because B. Riley has like stonk analysts themselves that will like talk in Q&As. So
what if that analyst that asked about the New York Community Bank question got reassigned to B. Riley, and then he just gets 2 in a row? Nightmare.
Let me just say, the reason I think that's a relevant point is usually you pull coverage from a stock because it doesn't make sense to cover anymore, either because it's become such a small market cap, or you think it's going to bankrupt, or it's just like it's a complete shitco. The fact that not a single analyst covers B. Riley, that's insane.
Yep. Traders will trade it though, because where there's vol, there will be traders.
Yeah, we should take a look at, I don't know, maybe short, maybe?
For the one that you said behind the scenes?
Both.
Yes on yours, B. Riley, you guys would be braver than me. I just don't like the setup on the vol side. But then again, what do I know? Like, I really, like, if people have more profound insights on all the other Greeks.
Let's say it goes to zero, though, within 2 years.
You'd probably want to get out before it goes to zero, because like short sellers can get screwed over by their brokerages, have been, even when they're of size. So
yeah, but let's say it approaches to zero.
Yeah, I mean, hopefully you win. That'd be cool if you win.
Well, I think in that case you win, but
yeah,
your upside is still limited. It's limited upside, but
yeah,
regardless.
Yeah, I don't have enough profound.
Does B. Riley pay a dividend?
Yeah.
Yeah.
What's
for now.
The yield right now?
For now.
Like 8%.
I don't think that dividend's going to continue to be paid. They're delaying their 10K.
Yeah.
You know what the short interest is right now?
Oh, it's out of this world.
Yeah. Whatever aggregator you want, it's ugly.
Yeah, it's probably crowded.
Yeah.
It's a crowded short.
Let me see.
Yeah.
It's crowded short, but like
it's not a wrong short, probably, like long enough time frame.
It will be a zero at some point.
Yeah.
Yeah, 75%.
Directionally. Yeah, if you could just get pure direction, no interest costs or worry about vol, like
but
sure.
The thing is, yeah, it's trading at $20 a share. You can buy a put at
what's the ticker?
Like $12.50 out till next year, probably. RILY.
Ew.
Yeah, like
we like dirty short sellers. Ew, what?
That's just ill.
Yeah.
Ew, brother. Ew.
Yeah, like
$12.50.
Like expensive. I get that.
It's
like
only back to the price of 2020. It's cheap,
bro. We were paying 70 cents for Perry.
I know, right? That was so beautiful.
Yeah,
this one, it's not the same as a Perion.
Yeah, this one you're paying up for it, but I think you're gonna see some downward movement pretty quickly. Oh no, I'm sorry. The dividend yield is 10% right now.
Yeah, I was gonna say.
Yeah,
I'm gonna look at my broker to see what the yields offering, or sorry, what the premiums are at.
Yeah.
You could also short their preferred shares if you want to do it that way. Yeah, you could buy puts on Riley P. That's like getting really degenerate, but like
I've never
what is the
thought
short
of
interest
that
on that
angle.
Yeah. Well, if you think a company's going to go to zero,
Yeah, like I agree with Andrew for the viewers. I do. It's just like I would caution people in how they express this short position or short view. That's all I'm gonna say to help like add some balance for whatever that's worth.
Oh my god, Virgin Galactic's like 85 cents now.
Yeah. I don't know how.
Oh my god,
the pain.
There's just no meat on the bone left for it.
Did you guys talk about AI stocks today?
No, we can talk about
You
it.
guys did?
Yeah.
No, we can talk about it though.
You guys see how they? If I didn't, I don't think if I had no AI related stocks today, I would have outperformed the market. But I underperformed Fabio, so I got fired today.
Yeah, that's
but
normal. What are you guys talking about? It's cheap.
What's cheap?
These Riley puts, they're cheap.
Are they?
You're just
I
looking
don't
in
think
the
they're
wrong
expensive.
place. What time
Bacon,
frame?
You're looking in the wrong place. Of course, leaps.
Oh, okay, Fabio.
Yeah.
Yeah, what you're betting? You want to go
That's
degen and say, "Oh, they're going to go bankrupt by July."
No, that's what I was saying. It was like a 1250 put. I think was looking for like $5 or 450 or something like that.
Oh no, Andrew, learn from me and Perry. No.
No.
Oh, you.
No.
Oh. Oh, you're.
Oh.
Okay. All right, Fabio. If we're willing to get screwed on the bid and ask, okay, fine. You got me.
What do you mean on the bid and ask? This bid and ask has a spread of 10 cents.
Oh, really? Okay, never mind. I retract my statement. I haven't really like looked at the options chain all that well, but
yeah,
bid ass nation, right? We should.
Yeah, bid and ask. Oh my god, that fucking asshole.
Yeah, no kidding.
Yeah, so I'm getting bid ask spread. It's not that much, 10 cents. Last price 45 cents.
Yeah,
per
but
contract.
Watch us all get front run on Monday.
Oh my gosh, last price 45.
Andrew's
I kind of hit where I want.
Bro, what are you buying? What are you looking at? What are you actually looking, dude? You can get a 1250 put for 340. That's not bad. Like, do we have to go this far?
No.
Yes.
No.
Dude, you know
why are you stopping there?
Darkness.
Hello,
dude,
darkness.
You know what's gonna happen? Monday, you're gonna wake up and you're gonna buy puts on this. I will not be able to. I'll be Wi-Fi-less. They're gonna issue the 10K and cut the dividend on Wednesday, and you guys are gonna profit on Friday.
Yes,
and I'll get none of it.
I'm looking
You're
at
saying
this.
I could get could I get a 5x this year? I mean, I'm half of what Tanner sells, but I guess that's good.
It's okay. SoFi's like 0 of what Tanner sells. So
I think he blocked me yesterday. So
winner.
I said a nasty comment.
What'd you say?
I just said, when are you going to capitulate? Well, I wasn't even mean. I'm like, when will you finally surrender, admit this was a terrible mistake? And then I think my comment disappeared.
Magically.
He's a clown, so it's whatever. All right.
Dex raises a good point, Andrew. If you do have the conviction for it, GTC order, why not? It's a fair point, Dex.
Yeah. Then you'll be filled. I'm looking right now. I probably could put like about maybe 2,000 in here, and
I mean, Andrew, you could power of attorney me, and I'll do what you ask me, and then a few other things. But
I'm gonna come back, and my whole port will be Curtis for right and BTI. You know what though? That's
I heard what you did. You sold it. I heard it.
Yeah, but I still hold my parents' account, and it's doing quite well there.
We're all just backstabbing each other.
So
they all recognize CW is a great investment, and they've all bought it and then sold it.
Yeah, look, I mean, my maximum gain would not be that crazy, but let me actually.
So was Curtis Wright fair value at 190 and then also 255? I'm just curious.
I could put 25K in there.
Wait.
It's okay.
Why am I stopping there? I might as well just go a little I'll put about 43.
We're having like 5 different conversations, I think, at the same time.
I'm
there.
doing that on purpose. I was
Yes,
trying to
we are. Meanwhile, I'm just laughing and doing your expressions.
I remember when I proposed
here
it,
trying to
though,
figure out, like,
someone's
can
like,
I
it
put the
seems
GTC order in?
expensive, and I'm like, it's kind of a quality investment. Like,
It
you're
was
not
at
getting
like a forward multiple of like
26, I think.
20. Yeah, 20. Yeah, close to 30. But it grew a lot.
Yeah, that was the key. I think they're going to keep growing. They haven't even fully. The sub production is not even full.
Are they
yet.
selling off right now?
I don't know.
What?
I don't know.
Let's pull up their share price.
I don't check everything every day.
You must.
No.
All right,
Dan, why are you here if you don't?
Oh, yeah, they are. Look at that. Look at that beautiful, beautiful crash. It's crashing, Dan.
Crash.
You're defunct. You're defunct. Yeah, look. Down 3.5.
Wait. What's my return? Hold on. Let me. How much am I devastated? 190 divided by 1. Okay. 24%. I'm doing all right.
Yeah, you're right. All right,
I'm
so
pulling up an options chain right now.
same. I'm literally
Right.
exploring.
What are you shorting the sub?
Yeah, I'm
No,
shorting
I'm not
Curtis.
shorting.
Right? Fuck your
Oh, you
company.
want beer?
I don't want to. I don't have
Bring
a
it.
death wish.
Bring it. Go ahead. Short it. Do what you want.
No, I don't have a death wish. But wow, look at this. So the premium on a 20 strike is $9. Holy shit. Yeah,
Premium on a what strike?
$20 strike
For what?
for the shitco.
Oh, for B. Riley.
Yeah, even the I mean, this one's not that bad. The 1250 strike. If you think this is a zero, you know. But the thing is, what we were discussing earlier about the risk reward isn't that good, because like you're basically putting down, in this scenario, I'd be putting down like 20K for a maximum gain of 30.
Wait.
You know what I mean? So it's like,
No, wait. How are you calculating that? So what's the
Barrel automatically tells you your maximum loss, which is all the premium that you would have, plus and then
what's the strike you're hitting?
1250.
What's your expiration?
I went out. I went further out.
2026?
Yeah, 2026. You think it's going to happen by 2025?
Well, no. I'm just trying to understand how it calculated your potential return as only being 30K.
30.4K.
Because I have here a 1250 strike, bid 440, ask for 90.
Yep.
So mid 465. So if you took 1250 minus 465, you have 785. It should be. Oh, you're saying the total gains, so you'd get 50K back.
Mm-hmm.
Okay. I got you now. That makes sense.
Yeah, but my profit is 30.
Yeah.
I get 50 back, but my profit's 30. Maximum, like the max I'll make.
Yeah, maybe this isn't as fun as Perry. Perry was
just
Yeah.
It was special.
Yes, it was.
That was a quality short.
So what happens when you follow a stock for too long?
You literally held money all the way up and then all the way down. No, I should not have sold my puts.
But like I said, you should have, I think, because no one could have predicted like a geopolitical event. I mean, well, that's not. I'll say someone could have predicted it, but it's not why we did what we did.
Yes,
SEC is going to be on our ass. Like, how'd you know? How'd you know? It's like my CIA insider told me what you guys were going to do.
Hey, do.
Bum ba-dum, bum 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 ba-dum.
Didn't even click on it though.
Ooh, Amazon easy. But let's see what Salesforce's price is at now.
CRM and Amazon 3 Horizon.
Yeah,
I think. I think Mag 7 Amazon is the most attractive right now, right?
Yeah. Yeah,
I'm
like,
biased to agree with you. 'Cause
Although I could start to say Google's getting better now that they found some huevos.
Llama 3 from
Yeah.
Meta is way better than Gemini Pro, and that's horrifying.
Yep.
Have you used it?
No,
You don't have
I'm-
Instagram.
I do not.
It
I-
is so it's free
yes.
versus Gemini Pro that you pay for, and it's way better.
So
It's
none of that matters. All that matters is that Google actually has balls now. Fabio's like this guy.
By the way, we also have
Wait.
had some fair questions on REITs. Also, if you wanted to squeeze that in later on.
they have to pay money.
Oof. I
Actually-
tried, chat. I tried.
I forgot about Meta. Meta's actually really. I've been telling you. I think Meta might be giving us an opportunity to buy in.
Yeah. Maybe.
I don't want to buy more.
Well, for
no.
you, yeah. Yeah.
I said buy in.
I don't want to buy more.
You don't need to rub it in our faces.
No, maybe no. Maybe I do. I just did. Andrew, I just came across a significant amount of capital. Suddenly fell from the sky, just went, "Whoa," and then just swallowed up the portfolio. I might just do Meta. Some might call it free money. Others call it degeneracy.
To
I would say-
embrace the paying question, though, like my only quote unquote opinion or insight, not even insight, would be Amazon, AWS. Maybe the sentiment for whatever reason has drifted downwards or not as great, and
Not very
CRM. I'm not sure about the setup where it is right now. That being said, Salesforce is one of my weak areas, so take it for what it's worth.
I can tell you that. So Salesforce, if they execute on Benioff's next phase of the company's plan, which is more on business intelligence software, that they can develop a product where the businesses are confident enough to share the data with it, because that's a huge problem right now. We have people in the community who they work at different businesses, different organizations at a level where they're having those conversations about implementing business software solutions, and they were kind enough to share with the community in voice discussions that is one of the main concerns of all their enterprises. And that's a consistent statement across many different people, across many different organizations. So that's a limiting factor for using business intelligence software. Think of all these AIs, and that hampers the LLM's ability to be useful tools for any business, because how do you trust them with your data, that the data is then not compromised and then someone else has access to your data, your competitor, someone who shouldn't just be seeing that stuff. Salesforce understands that issue. I think it's a known issue, but Salesforce is the only company I can think of that has overtly stated they want to fix that and they want to develop tools for that. If there is a company in the B2B software space that will solve that, I have faith in Salesforce. So if they are able to solve that, I think that they'll have a pretty long growth runway, and they'll take share from a lot of different B2B software businesses. They're also still very acquisitive. They're still showing us that they're looking at plug and play businesses, plug and play acquisition, sorry. And their recent acquisition, if I remember correctly, actually aligns really well with Mark Benioff's commentary. So the company called Informatica. And then Informatica is, I think, a data governance business. So still kind of, again, buying up a business that operates within that space, where Mark Benioff said, that's the next phase for Salesforce. We're going to focus on finding a way to develop solutions where a customer can trust our product, where their data is going to be secured, and they can use these LLM tools to get business insights. They have the data analytics platforms like Tableau. They have, and by the way, Salesforce has been really smart at going to many universities across the country and making sure that you're shaking your head because you're using Tableau, I'm guessing.
It's been here in a few classes, yeah.
Yeah, that's the way to expand. So that way, when you're going to the workforce as an accountant, you're already familiar with Tableau, and there you go. What do businesses want to use? Because we actually had this conversation today about when an enterprise chooses a CSP, cloud service provider, for those of you who know CSP, they look at not only the quality of the CSP, the security of the CSP, and the infrastructure layout of the CSP, meaning, where are their data centers across the world and how that could probably benefit their enterprise. They also look at who are the most amount of people trained for that cloud service provider. So Azure has that advantage that a lot of people are trained in Azure, a lot of people are trained in AWS, not many people are trained in Google Cloud, which is a problem for Google to expand, because if you're a business, you're like, I can't find people who are really good at Google Cloud. So
that's why Google's like try to do things like have it for free for college students and stuff like that. So college students code on the GCP platform, and that's been like somewhat helpful, I think. But that doesn't solve your actual upper level problem, right? Of like senior people who are gonna make the decision. See it, Dan? But senior level people making the decision, knowing how to do it, right? And to be clear, you're saying this is a relative.
No.
Yeah,
right. It's a relative that I'm talking about.
Yeah, like a lot of people know GCP. That's why it's one of the. But
okay, yeah.
But like not nearly as much as people know AWS or Azure.
Yes. Yeah. Every rep Salesforce developer I've ever worked with hates Salesforce with a burning passion, despite it's integral to so many enterprises. Unfortunately, here to stay. Yeah. I'm a cybersecurity student who is trying to be an AWS cloud security engineer. There you go. Continue.
Shout out, Marquise.
Marquise, here's a question, and there's a right answer to this. If you could buy one cybersecurity company and hold on to it for the next 10 years,
are you going to give him a reward for his answer? You can give him that reward. Oh,
well, he's a student. Yeah, we could give him that reward.
Okay, so he's extended you a reward. If you answer the question to his satisfaction, you get a CM Gold membership for 1 month for free. All right, ask your question.
I said the band. The fuck? You're not supposed to give the answer out.
See, this wouldn't happen on Two Accountants One Gap. Now what?
No. So if you had to invest in one cybersecurity company, the highest, and we can even take valuation out of this. I own Crowd already. Okay, I like this man. Get him into the club.
Get him in.
All right, let's see. All you need to do is click on the link, get to the server. Don't pay for anything. Just message me directly, and once you're in the server and all that, we'll give you the 1 month membership.
But
you're satisfied, Andrew.
This guy likes Monster over Celsius, and he likes Crowd. I mean, sounds like he and I could be friends. That's all I'm saying.
Oh, thank you for the shout out. Shout out CM. Y'all are one of the highest quality investor YouTube channels out there. Much love to you all. Thank you. We love you too.
Many thanks.
All right, so there we go. Andrew's happy now.
Andrew's happy now. Now let's make him grumpy with REIT talk.
Oh, yeah, we got a lot of questions about REITs, but let's finish up. Let's wrap up the guy's question who did pay for it. And so kind of wrapping it all together, I think Amazon is more interesting because Salesforce has to prove a lot. I think with Andrew Jassy's current strategy, you have a business that has executed really well in advertising, and they still are going to execute really well in advertising. That's going to be a cash cow. Then you have the retail business that still people kind of underestimated Jassy's ability to do that. They all blamed him, saying, he's good with cloud, but he doesn't know retail. No one's saying that anymore. Now with management saying that cloud is going to be their focus point to reinvigorate cloud growth, that's very interesting. And we had a very interesting discussion in the club today, again, about enterprise cloud solutions and where the industry is moving from people who are very familiar with the matter. Okay, so that should be noted. It's not just like, randos who are looking at, I don't know, a website data aggregator and looking at numbers go up. No, people who are in real world discussions talking about implementing these products and solutions at different enterprises. And something that was brought up that was very interesting was just how the pie is perhaps going to grow in more ways than people think. All that to be said, AWS is going to be a main beneficiary of that. And there'll be other players that will all benefit too. But between the two that you gave me, I think Amazon has a lot more clear levers to pull. And I have a much larger allocation to Amazon. So I'm a little biased. You got to understand that, even though I am a Salesforce holder. And I have been buying more Amazon. So I just want to let my biases out there.
Andrew, any thoughts on the question?
So I also think that there's so much more to this company, like, because it seems like you're primarily talking about AWS, correct?
Oh, no. I mean, like, I'm really bullish ads. I'm even really bullish their internet service provider business.
Oh,
that's
really?
something. Yes, that's something that came out of nowhere. That they said in their own letter to shareholders, this is going to be a major revenue driving business in the future. Not penciled in at my valuation whatsoever. So value that at zero.
Prime seemingly learning from their massive fuck ups and doing better.
Look at private chat.
Alrighty, I'm looking.
Well, no. That IP's lost. It doesn't matter. I'm talking about the new IPs they're rolling out. So, but like I heard Fallout was really good. Some people love Fallout, and they're sticking. I mean, if Henry Cavill stays with 40K, like, you have some very some really positive IP there. And Jassy also said, like, it's doing well. So I think that I agree with Amazon. To be fair though, I'm invested in Amazon. I'm not in CRM. And so obviously there's a bias there, but I guess that also tells you where I feel or how I feel. I think I think Amazon's really attractive here.
Very, very attractive. Brian has a point here. 90 people watching, only 24 likes. I think there's more because you have to refresh, but
yeah. Let me refresh.
And we do have 170 across all platforms. So welcome everyone. If you're watching us on Twitter, feel free to like, retweet. If you're watching on YouTube, like. If you're not subscribed, subscribe. All that jazz.
31 is what I got.
There we go. All right, we get some more likes. It was leaked.
Just
they might for the backlash change it, but it was leaked. You can verify.
Yep.
Proliferation of the index investing have on individual stock prices more difficult, easier. Okay, I think if you're kind of penciling out or thinking it in a way that there's going to be, more blind money following things, I think that's easier for stock pickers, not harder.
Agree.
Yeah, same here.
100%.
Yeah, I would just add with the caveat of people would just need to be more patient and accept probably some more rocky rides with some of those picks, especially if we're going smaller. But maybe I'm wrong.
Yeah,
because you'll have a lot of things that trade off in conjunction with other things just because they're in a similar bucket.
Yep.
Nothing to do fundamentally.
Oh, and I know Elemental is no longer in the chat right now, but he did incur my wrath, so we're gonna have that convo about the VIEs.
Oh.
Once again into the deep. All right, you ready for this?
Sure, why not?
Andrew's not ready. He looked to the corner. He's like, I'm trapped here.
I was like, how long have we been going? We're past the Lord of the Rings movie. Fuck it, let's keep going. We're in the extended edition now.
Okay, we ball.
All right, so I feel like I can make my point here all on one tab. So let's remove these, and we're gonna do symbols. We're gonna remove this. We're gonna do Baba. We're gonna do JD.
Oh, it's Baba.
And I think these are the two major ones. He was using JD as an example. And we're going to look at the share buybacks.
Flat on the day. It's a little up, but
What's the
down
price?
after hours.
All right,
69.03.
so we're going to look at the percent change. So we'll do the 5-year. So I made this point a little bit earlier, but you look at the 5-year chart on share buybacks, you see that, okay, share buybacks, JD has been dilutive. Alibaba has been almost, okay buyer of stock, but they bought back a little bit of stock. And then, 10 years, they're both still dilutive. 3 years, Alibaba is going a little bit harder on the paint. But let me show you why that's actually kind of strange for both of them. In both cases, this is a rather strange predicament, because if I go to let's go to this new tab here and share this tab instead. And I'm going to edit symbols just to have only 2 focal points to make it easy, jd.com. What do we notice here? We go down here to the peer group, looking at the balance sheet. We have a really strong net cash position by both companies, followed by really strong cash flow generation. And so I've made tons of videos at this point talking extensively about the VIE structure and what the implications are. And then you had, people from Everything Money to be huge endorsers of Alibaba and saying that they understand it, they don't understand it, that they understand it and the implications of it, and you really don't. So the whole point is that these are not valued off of those risks that I address in the video. If they were, they would be valued at close to zero. What you have here instead is there is a discount applied for political reasons and sentiment reasons. And so I do think that these are still good instruments to trade. But let me point to some of the red flags. So let's focus in on the total cash or the net cash position by both companies. You have a very strong net cash position. Let me remind you the market caps. So right now, they're both trading at, and you look at the price return, at very, very, very low levels. I think they're both trading below their IPO price. And the market cap, by extension, are also at really low levels, 167 and $39 billion respectively. Let's go back to the cash position. So the net cash position, if this was a company that wanted to show shareholders, hey, we have confidence in the overall business, we have a strong confidence in the overall operations, and we want to reward you as shareholders. The stock is cheap by every measure that you can imagine, assuming the numbers are correct. We're not going to get into that. Assuming the numbers are correct. So you have, again, about $5 billion here, and let's call it, let's be a little, let's just do the levered free cash flow figure. Fine. Let's actually be, not the operating cash flow minus capex. Let's just do levered free cash flow. Just for conservatism, easier that way. It should be a little bit higher, but 20 billion, 3 billion. The point is still made with these figures. So if you draw this down to a cash neutral position, basically you get it back to where cash is just matching all liabilities on the balance sheet. That is still very low leverage, and you could be absolutely, utterly destroying the share count. But you're not. They're not doing that. It almost seems like token buybacks.
Not only do they have big cash positions and they're very cash flow positive and they're trading at low multiples, they're almost trading at book value.
Yep. And these companies are companies that should never be trading at book value in a normal scenario.
Yeah, as a point of reference, like Amazon's book value is like $20 a share.
Yeah.
But do you trust that book value?
Do I trust these? I'll assume they're true.
Okay, all right.
I'll assume they're true.
You know what that means? Pair trade. Long Baba and JD is what Elemental might say, and short Amazon. It is overpriced.
That has not worked out very well in the past, and I don't know if I'd.
Yeah, not be a good decision.
I am joking.
It doesn't pass the smell test when you start to think about it this way. So why would you be holding all this cash? Why would you not be buying back shares? Why are you doing such small buybacks at where your stock objectively is probably at the lowest valuation ever? You could be plowing all of your free cash flow into share buybacks just temporarily. And if you're right, the market is suppressed right now. You're going through a Great Depression. I mean, take advantage. You could buy back half the company easily, not even bat an eye. Again, assuming all these figures are true, unless there's no incentive really to do so, because you're talking about dealing with individuals who they don't really matter. Now, you care for the purpose. In the case of JD.com, the reason why their net cash deletion is still positive because they are still issuing more shares than they're buying back? Well, because you're using it as currency to pay for your employees, and so you're giving the appearance I'm doing all these buybacks, but the common stock outstanding isn't really being hampered because I still use it as currency to pay employees. So obviously it matters because it's basically free money because you don't give out ownership to the Western investor. Why would you reward them with buybacks? It makes no sense. Besides just to coddle them for sentiment, to keep the share price as elevated as you possibly can. And that's about it. That's the only goal. No more, no less is the point. I rest my case.
Elemental Tamago would disagree, sir.
I know. And he's not going to see big buybacks. He's going to see little ones. You could look at Imperial Brands. Think of Imperial Brands, British company, putting about 10 billion in share buybacks. Sorry, not 10 billion. Jesus. Almost $2 billion in total capital return to shareholders. A 20% yield.
I could make the counter argument. I think the real counter argument is you can say, well, yeah, look at Japan. They don't do buybacks either.
Well, yeah, but that is why Japanese companies have historically, one of the reasons why Japanese companies have historically traded at a discount relative to peers as far as like industry comparison goes. That is a good question, Citizen of the Year. How am I still up? Double duty, mini live stream on Two Accountants, One Gap, and here.
I just wanted to say, Japan does the same thing. Japan, I've seen some companies that have like insane amount of cash and all this. Now, you could argue theirs is more just cultural. They don't return capital to shareholders. It's kind of a thing. But there's my point is there's other countries or other companies where that happens.
Mm-hmm.
Well, I mean,
just to be devil's advocate.
Yeah, like does it really matter if it's if we're harumphing over a government or harumphing over a family group? Because Japanese, we're talking about.
Let's take a Japanese company. Give me one. We'll look at them right now.
Mitsubishi ?
Could you grab Nintendo? Is Nintendo one? Damn, Nintendo's sold off.
Mitsubishi Corp. I have the OTC one, but
so we have Nintendo share price just for reference, and then we're going to pull up the symbol and then Nintendo, and then we're going to also look at their balance sheet, and then we should
Tokyo try number 8058.
Alrighty, I just pulled up their ADR. It should roughly still kind of come out the same measure. So negative 2.27%. So they're beating JD and they're not beating Baba over this period. And Nintendo is beating them all now over the 5-year period. So now let's go and grab Nintendo and throw it in here to see if they have the same standards that we're applying. They have a net cash position. I can already tell just by looking at the enterprise value relative to market cap, and they have 14 billion in zero debt. With the cash flow projection, this doesn't scream to me. This is not the same scenario. I can already tell you right now. The net buybacks that they've been doing based off of this market cap is well in line with a company I would be expecting producing. I'm just going to take this figure just for the ease of it, $2 to $3 billion in free cash flow. I'd be expecting that rate of reduction in share count. They're not trading at that cheap of a valuation. They're putting a decent amount to share buybacks, enough that I'm not, saying there's something weird here.
But because let me just look. If I remember correctly, they're just like. They've always had cash.
Oh, I wasn't sharing this. I was supposed to be sharing this. This is they have cash, but like it's not. What do we want them to have? Zero cash? It's nothing crazy. We're talking about a business that doesn't have half of its market cap in cash, or like 45% of its market cap just in cash. Let me just reiterate this. Baba, $167 billion market cap. Net out the debt, because this is including leases and all that jazz. Net out just the financial debt. You have about $66 billion in cash off of a $160 billion market cap. And you're telling me you're just doing that little amount of buybacks.
Okay.
Sauron raises
can you pull up another one for me?
I got you. Tell me which one.
It's Cell Corporation. Ticker is 5078 on the Tokyo Exchange.
Oh, you got to give me an ADR. Seeking Alpha won't let me use that as a comparison.
I don't know if they have one.
While you're looking, Sauron raises a good point about currency in general.
507R. Let me try.
5078.
Oh, 8. No. Yeah, Seeking Alpha is limited in that. But what's the name of the company?
Cell Corporation, CEL Corporation.
How old is it?
That is a good question. Looks like it's been public since 2022. It's not super long.
Ooh. Okay, so probably not one of those old school Zaibatsu.
It has a negative EV.
Yeah.
And it's supposedly growing revenue 20 to 30%. It's a weird company. It's a special situation I was starting to look into.
But that's a special situation. That doesn't count if it's a special situation.
Yeah.
Those exist in the US too.
Sony.
Okay, Sony. That's fair.
I'm trying to be devil's advocate here, okay?
You're trying. It's just I am curious though, like with Sauron's point of currency effects on this.
Oh, but that's for the performance of the share price. Yeah. I'm talking about straight buybacks, cash on hand, etc. Cash flow relative to more or less. It's supposed to be passing the smell test. Sony's passing. Okay, we got Sony 5-year trend.
I don't see. Wait,
oh, sorry, I forgot.
Negative
4%. It's beating them all. 3%. Sony's still doing, pretty much buybacks across the board. Obviously, you could say, oh, not as much as they should. Whatever. That's not the point. Now let's see if they pass a smell test here. So we go here. Don't worry, I'll share in a second. I'm just adding them so you don't see don't get bored with that. All right. Already here. Well, the enterprise value tells me that they don't have a net cash position. So it already doesn't really fall in the same category that these Chinese companies are. But balance sheet's really healthy, really strong free cash flow, market cap off of that free cash flow, fully within line of reason of those buybacks. Sure, they're not putting 100% to buybacks, but that's not my point here. My point is that look at JD, $40 billion market cap. Let's go down. What is that? Let's just take the 3 billion figure for free cash flow. 3 billion off of 40. What? If that's actually more so like 4 billion, because if I actually do the actual free cash flow, what? Yeah, you got 4 billion cash flow yield of 10% easy right there. Net cash position of what? 21 billion? 21 billion net cash position off of just using the financial debt, not the other, leases and all those, with a 10% cash flow yield. And that's all you do? At the cheapest valuation you've ever been? That's the point, Andrew. At the cheapest valuation you've ever been? Ever?
The devil's advocate.
That's all you do?
Has failed.
What's wrong? Either management is bad capital allocators, because they clearly have nowhere to put this cash. This cash is just piling up. They got plenty of free cash flow. They got tons of cash to cover all the liabilities. And then you're in a scenario where your share price is the cheapest it's ever been. Something doesn't add up here.
Something doesn't add up. And I agree with you. For the record, I fully agree. I've written articles saying I agree that investing in VIEs from China is not a good idea. I was just trying to do my best to do devil's advocate.
I know. I wish Elemental was here to defend this point.
because and the other thing too is like it doesn't just have to be buybacks because they could do dividends too. You could
They
say they're
could
not doing,
give it to the shareholder.
but they don't do that.
No.
I don't think.
They do dividends.
But-
Token dividends. Yeah.
It's the same as the buybacks though.
Look, like I think Alibaba does a buyback. Sorry, does a dividend now. Oh, I wasn't
they just
showing you
issued it.
this again. I wasn't showing you. So Sony, healthy. It's all within line. I keep forgetting. So now let's show you. Yeah. So look at that. Look at that. By the way, wait. This is the fucking wild shit. Okay, that's a 1.45% off of the current value.
Yeah, I mean
That is token galore.
right.
That's not like, oh, they're trading at Meta valuation and the Meta dividend is like 0.6%. But Meta's trading at, above market value. No, this is like Alibaba is the cheapest it's ever been. And it's like a 1.45%. Like we're talking it's at book value.
Okay. Second pushback. And
Let's
I
go.
actually don't know the answer to this. I'll go buy it on the Shanghai exchange or on the Hong Kong exchange.
What's the difference?
Cute.
I don't know
I
if there
already have a counter.
If you buy it in Shanghai, what happens if you buy it in Shanghai? Is that a real?
No, it's the same thing.
Yeah, like my counter question.
Oh,
like
Shanghai, you said. You can't.
Yeah, and before I even like fully counter, my
Okay.
follow up would be, are you a Chinese citizen, or are you a Chinese citizen?
Look
that
at me. Of
owns
course,
the
I'm a
needle?
Chinese citizen.
Yeah, like if hypothetically you were like you had the Chinese citizenship, maybe you could have the argument that you have a better ownership claim. But we already have judicial precedent in Yahoo and some other company that completely got screwed over.
Are we able to see the return for these stocks on the Chinese exchange?
How good's your Mandarin?
But you should. I mean, it's a line, right? So, I'm just saying, is there like, do data aggregators pull that?
No, not that I know. I haven't looked.
Yeah. Sorry, I don't have a Bloomberg terminal.
Is it SEHK? Is that Shanghai or is that Hong Kong? SEHK.
HK is Hong Kong.
Yeah, I don't think I can pull the data here.
And you can, as an American citizen, own the A shares, but you have to relinquish voting rights. If you work, you have to live in mainland China and work for that company. Then you are allowed to have the A shares, which grants you the actual ownership of the shares, but you cannot have voting power. These are illegal in almost every single way. It's not even funny. Like owning these things is illegal in China in almost every single way. Because you have like votes, right? And then what you actually have is the actual owner votes on your behalf. The custodian. Who's the Chinese guy that actually owns the shares?
Oh.
Howard Marks owning Baba. He won't be the first super investor that I still hold respect for that will die on this hill.
Yep. That money will die on that hill.
Wait, Howard
Probably.
Marks? Why is he investing in Commons?
He's Howard Marks like that.
He probably thinks it's extremely cheap. Sometimes they forget the basics. They're legend, but they forget the basics.
But he was distressed debt, so I don't know why he'd be investing in Commons.
It's probably a small, tiny portion of his portfolio. Or he could be just buying it based off of sentiment trade, in which case I agree.
Yeah.
But,
anyways, any final thoughts on this one?
That's it for me.
Yeah, that's it for me.
Okay. REITs and potatoes are the ones that I've seen.
We'll close off on those because we're at 3 hours and 21 minutes. We've gone over like Chads. All right, so REITs. I did put in that we were talking about Blackstone because Blackstone had a lot to talk about with REITs.
Oh.
Alexa got triggered. Sorry, just triggered for a bunch of people. It's a household name. So Blackstone said some really interesting things about real estate, particularly CRE. And I won't talk about the stock that Andrew's been buying because that one's a good one, I think, for commercial real estate exposure. But Blackstone commented a lot about commercial real estate, mainly being that right now there's a lot of opportunities out there for those who have capital to buy up distressed properties, and the desire for Blackstone to start hunting for CRE opportunities in the US, because they have CRE, but not a lot in the US. They are looking at buying up publicly traded REITs outright. Yep, they stated as much, because if, like I said, they are trading at valuations cheaper than 2008. It's still true. And Blackstone's opinion, I think we agree. Who am I to say that we agree? But yeah, we agree. That this is temporary. A lot of there's been overbuilt, and all that's going to happen is just normal, healthy market adjustment. And if you're able to accumulate the assets during this painful time, you'll come out the other side much better off. So that should make you bullish still on the thesis for companies, some companies like Alexander Realty Trust, ARE. That also could make you bullish on companies like KRC, potentially lowered leverage office REITs and Class A properties. Keyword lower leverage, Class A, in certain geographies to kind of play the recovery or the non-downfall of certain cities. And again, valuations are still really cheap. You might get also some tailwinds on rates coming down. Which is interesting.
Nice, Andrew.
Oh, it's unrelated to this. I didn't want to interrupt what you were saying.
Yeah. I chuckled.
That's funny.
Yeah.
All right, we'll share this because that's related to what we were just talking about.
Yep.
On the bright side, you can only lose $66.40 more. That's funny. That's a funny tweet, and I'm going to retweet this. All right.
Yep.
Moving on.
Yep.
So, yeah, that's the basic commentaries. REITs, and then there's some industrial opportunities. Industrial's getting hit hard. You have Prologis getting hit. You have Rexford getting hit. You're going to say something?
I don't know if you're trying to switch screens.
John is Fabio's burner. Just trying to usher in Fabliocracy. I love the name. All right. And the other topic, Bacon, was REITs and
potatoes, Lamb Weston specifically.
Andrew's gonna love this. He's gonna have so much fun talking about Lamb Weston. It's not even funny.
LW?
LW.
Yeah. Like, it's
Is
weird
it down?
because
It probably is down because Drunk sold, I think, last quarter.
He sold LW?
I think so.
If he sold LW, he should really consider buying back in, because now is the opportunity. Let me explain. So they did something bad. They blundered something, but I don't think it's the end of the world. They blundered ERP.
Yep.
He sold 70% of his shares in Q4 last year.
Okay, great timing, but he should really reconsider now, because the valuation, it's interesting. This company typically has not traded cheap. It's an ERP blunder that's going to have a negative impact on EPS in this quarter, or had a negative impact on EPS this
ERP
quarter.
meaning what?
Enterprise something
like
program.
Enterprise resource?
Yes.
Enterprise resource?
Yes.
Planning?
Yeah.
Yes.
Okay.
Yeah.
Okay, continue. Now this is weird. Okay.
No,
so
Nike
so their SAP
also.
fucked up. So like their SAP. Oh, you're saying enterprise resource planning as like the actual
program.
Yeah, so like their SAP.
Mm-hmm.
Yeah.
Yes, and actually it was SAP that.
Yeah.
Yes. They use SAP. Right.
Yep.
So that's what messed up. And then it messed up their whole supply chain logistics. They were unable to fulfill some orders on time. and they had to basically make concessions and discounts, and it had a negative impact on EPS to make things right by the customer, which is fine.
Yeah.
They even said this is a one-time quarter, and it should not happen in the next quarter. If you believe them, I think it's a buy. I think it's an interesting pick. Hey, there's been times where, market doesn't believe a lot of things. I think the market's just like absorbing it still.
Can you tell me why there's such a large variance between their net income and their free cash flow? Do they have a lot of capex? I'm intrigued by this, for what it's worth.
Do they have? Let me just pull up their figures because I don't own the stock yet.
Yeah.
I've just been looking at a cursory glance at the business. But what was your question one more time? I'm going to the cash flow statement.
Do they have a lot of capex?
Why their earnings are so much more than their free cash flow?
Right now, there's a lot of capex. Like this year, but typically no.
Okay, so they have an ERP mess up and they're going through an investment cycle.
Yes.
Okay.
Business is very simple to understand. Everything potatoes they sell. French fries, mashed potatoes. They just sell. Their customers are a bunch of restaurants all around the country.
Then I have a bit of a question because I am intrigued as well. I have been intrigued. That would be like, why is this business not commoditized, or should it be commoditized, or is that the wrong way of thinking? And the other one is there a cyclical element to this company?
Cyclicality. Let me actually look at it again because no, it actually seems like as far as sales go, it's straight up and to the right.
Oh,
it's been up to the right.
Okay.
There are very few major players.
Oh,
what? I'm sorry. I'm like in my own thought and then trying to ask a question and then interrupting you. Continue.
No, you're good. Mm-hmm.
So I'm looking at the 5-year stock chart. Oh, yeah. You have it right there.
Yes.
Why? It doesn't seem like the revenues are cyclical, but this stock chart screams like cyclicality.
It was always very expensive. Since it IPO'd, it's been expensive. And I'm going to pull up you need to look at it from this perspective. Oh, also, Marquise Harding, I think, because the link you're looking at down below, try this. While you're listening to me, go to one of the really old videos, like from almost like a year ago. Click any of them. Try to click on that link there. It should take, for some reason, some people find a way to get into the Discord all the time. They get stuck in the limbo period or the limbo room until they, if they get the membership or not. But I don't know. People still find the link.
What might be easier is he can just get like your or my Discord handle and then friend us.
Here, what I'll yeah, we could do that, or I can just post the Discord link in chat. So,
and that's going to get you to the part where like you can't get into the paywalled stuff, right?
Yeah. Oh, for everyone listening, if you're interested, do not subscribe to the stuff that says old gold membership. Do not subscribe. Do not subscribe. Do not give free money. It literally has warnings on it. Don't do that.
So everything like from this business fundamentally seems pretty solid. On a longer, like gross margins have been going up. Do you think the current gross margins are sustainable?
Yes,
because that's a massive jump. It went from
sorry, no, normalize them. No, normalize those a bit.
So you think they go, because like last 12 months, we're looking at 20 here. I can share my screen.
Yay.
Here, posting the link to the Discord. That's for you.
This is where everybody rushes in. Yeah, Marquise Harding.
No, I'll ask him questions that only he would know.
Okay, so here's like gross margins. So you're seeing it kind of trended up to like it hit 26 in 2019, and then post COVID kind of sold off down here to 20%, and then shot back up to 27%. So I don't know. Like it seems like they're on a solid trajectory to get it up to this point, and then maybe COVID messed it up. And if you saw, like they had a massive sell off.
Oh,
from COVID.
I said, yeah, pre-COVID. You want to go to pre-COVID margins. That's what I was.
Oh, I think this is normalized. Oh, I'm sorry.
No.
So
normalized.
We're looking
pre-COVID.
at probably. So it's roughly at run rate then, we think. If we go to quarterly, I don't know how much this changes. But
And let me actually show you guys the valuation. Because this thing IPO'd. I've been following this company since IPO. Okay. So let me quickly show this instead. And then if you see my screen, that's the story of the valuation. This thing IPO'd asking for a 20 handle. And I was like, oh, yeesh, you know?
a 20 handle? On price.
Yeah.
Oof.
And then at one point was commanding 60. Oh, it was always expensive. Ever since I followed this company, it was always expensive. I was like, what the fuck is this? And now, finally, it's sitting at a 10. After all that patience, all that just sitting there and waiting, having it on my watch list, being like, oh, this like potato company. So.
And you're confident that this current investment cycle is not gonna be long lived?
Yeah. Oh, this is the easiest way to Marquise, tell me your username on Discord. That's the easiest way to verify you.
Hey, there we go. By the way, Marquise, as far as I can tell, possibly, that being said, McDonald's has a diverse potato supplier list. It's not just 100 Circle Farms, which is connected to Bill Gates, but plenty of people.
Yeah.
Yeah, so it does look like they've gone through a ramp up in capex in the since like end of 2022.
Think of it like this, Andrew. I'm gonna tell it like this. You know Taiwan Semiconductor? This is the Taiwan Semi of potatoes.
Yeah,
but they don't do potato chips.
How is AI gonna boost me in potatoes?
AI can scan for imperfections and quality control, improvement in quality control.
The one thing that's a little like scary is like they have a real like their free cash flow margins are like the most sporadic, insane shit. That's quarterly. I guess I can go annual,
but yeah, I would. In this case, I think Gap does the heavy lifting as far as normalizing the picture.
Okay.
Shout out Gap.
Yeah, shout out Gap. You know, everyone says like, Gap is stupid. Accountants don't know what they're talking about. Regulators don't know what they're talking about.
Stupid.
Accounts are stupid.
Yeah, like why would they even have a YouTube channel like Lamau?
Like 2 accountants, 1 Gap.
Shout out.
Who would do that? Yeah, you got me intrigued.
With a sexual innuendo.
Wait, sexual innuendo. What do you mean?
It's a joke.
Oh no.
You guys are making play. Oh, it's not innuendo. Just like
no, it is.
Okay.
I was trying to draw it out.
Okay.
I know it's interesting. The problem with this, I'll tell you what the biggest problem with this company is that I have all these other companies I want to buy.
I know. That's what's kept me
having
out of it.
I don't know. I think I could afford a Peter Lynch style because someone else can yell at me, but I want to say this kind of is befitting of a Peter Lynch
Cyber
style.
stoic.
All right, I got you. I already see you. I saw you came in.
Winner.
All right. You are now. Boom. You have it for 1 month. Congratulations. Welcome to the club.
Welcome.
We are a cult, by the way. If you disagree, one of the mods will ban you.
Yeah, if you say anything I don't like, and especially if you say anything that this is a person 100 biotechs taken very seriously.
No, call him fat. The moment you first interact with him, just call him fat. Poor.
It's hilarious because a community member met him and like he's not fat.
He's not fat and he's not
Yeah.
poor. Call him fat and
Yeah.
poor.
How do we know? How do we know that he's just not paying that community member to say he's not fat?
Fair,
That
but
community member is on a mission, by the way, to
Yes.
meet everyone. Like
Yeah.
he's meeting everyone. He has selfies with these people.
Really?
Yes.
Yeah.
He sent me one with JC. He has one with Biotechs. Of course, Biotech's face is kept protected.
Yep.
But yeah, he's traveling around the country, work trips, and then he's like, "Oh, I'm in this city. Who's in this city?" People meet up.
Well, he'll never see me. I don't think he's ever going to come out to where I am for a work trip. Maybe we'll meet like in Vegas, where we both have an overlapping trip there or something.
Yeah, well, that's how they met. That's how him and Biotechs met. They had an overlapping work trip in Vegas.
Really?
Yeah.
Well, his was a work trip. The other was a wedding, friend's wedding, I think. But yeah. I just find that hilarious. He gets that moniker when I'm the only one who's confirmed fat and poor.
No, you're not. Don't worry. All right. So welcome in. I think you should be able to see everything, and then you just let me know. Okay. I should also. I'll let you know as also like a shameless plug of the club itself. But you, just so you're aware, we do the private streams. You'll get ads for them. And then you can go in through the recordings. You have like I think it's like literally hundreds, if not thousands, of hours now of private content.
Scary.
It is, but we do it a lot. So
yeah,
because I think every private stream is you have the weekly call, which is just me, and that one goes on for
minimum an hour.
I'm gonna be. I think I'm gonna be close to where that member lives this fall.
You will?
Yeah.
Oh, well.
A meetup is in the works.
Yeah. Yeah, then there's ICOM, which is roughly hour to 2. Which is overdue.
Spontaneous voice chats. Yes. We're overdue for one. Next ICOM, Andrew will not be with us.
Yep.
Andrew is the most aggressive mod. Yeah, you are. You technically are. Yeah.
Because Andrew's not just a mod. He's an admin. Yeah.
I'm the only one that enforces rules around here. Okay.
Yeah.
Well,
I'm so laid back.
Like, I don't have that much powers.
Fabio's like, oh, the children are fighting with knives again.
No. Actually, I'm gonna call myself out. So there was one incident that was happening. I didn't do anything. I literally cried to Andrew. I was just like, literally that. I was like, Andrew, the children, they're fighting with knives. Whatever shall we do? Please, would you help me?
I was like, fine. And then people were like, why are you such an asshole?
No. Andrew came down like Thor with the hammer.
Yeah.
Started annihilating. Should we say the two content creators? I won't say who. Use your own imagination. It wasn't two like members. It was two content creators went at it. All the club members, you know who they were. So two content creators, YouTubers, were in the server and they were fighting. They were fighting for like 2 solid hours.
A fair amount of community members didn't help things either.
Oh yeah. Because you had some community members who were just like, they're like, all right, this is hilarious because they watch both. They watch both people.
Yeah.
All right, so it's already. I mean, yeah, it was.
Okay. Yeah.
But they were just like watching it happen, and they're like, all right, I'm gonna throw this comment in to like rile up the other one. Oh, I'm gonna throw this comment to rile up the other one. And then I did my bitching to Andrew, and then Andrew was like, all right, I'll take care of it. He comes in, smacks down the hammer, slow modes the room.
Well, the funny thing too is like I don't really go to those channels that often. So like I was like guys are like, man, they're just fighting in there. And I was like, fighting in where? And they're like, yeah, see they go there. It's like, oh, it's a battleground.
Yeah.
Oh man.
Yeah,
So,
that's free.
From that day on, Andrew is known as like he's the mod that don't mess around.
And there were a couple of incidents after that because I feel like now there's like a precedent where the mods are like, oh, Andrew, he'll ban it. But now that means for the next week, y'all can go wild.
The way I can fix this is give biotechs tons of power and give them like a timeout quota. Like you got to time out a certain amount of people.
I'm gonna get a lot more quiet in that Discord.
That's a timeout.
Yeah.
All right.
So, all right. And that's a timeout.
Yeah.
What was the last topic? But Lamb West.
Yeah, Lamb Weston. So you like it from a forward basis? You think margins are sustainable?
Yes. Yes.
Yep. I guess the only other thing wrapping it up was apparently to double back on REIT's sentiment, YouTuber sentiment on income or realty income has shifted to being more pessimistic, I guess.
About time.
Yeah, I was gonna say like it's just so big that like sentiment can be right, but like I'm in no hurry to throw money in there.
It's about damn time. Yeah. No, it's too big. Acquisitions.
Okay. Yeah. Simple as cool.
Simple as that. Simple as that. All right. With that being said, you guys got nearly 4 hours of live stream tonight. I always enjoy these. It in lieu of videos because I just can't get as much time these days because the private videos they take up all the other time, and then I could probably squeeze in one video, but I used to be able to have enough time to crank out like 2 to 3 to 4 a week. What I just need to do is just not hang out with the community members too much. I'm just not gonna hang out with you guys anymore.
That is a lie and a half, you know it.
No, because that's actually where the stock discussions happen. I can't afford that.
No, you can't.
No, that's how we make money. It's actually old sober Fabio is OP. Yeah. All right. With that being said, everyone, thank you guys so much for joining us in today. We had a lot of fun. I'll leave you guys out with the outro for club members. I will degenerately, because it's weekend, I'll degenerately be still in voice chat for a brief period, maybe maximum an hour, because it will be 3 a.m. in an hour.
Yeah.
So I'll be seeing you guys on the next one. And let's do this out. Let's do the rap outro from that content creator.
We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Besides making these raps and complaining about school and fucking watching Entourage all the way through. Well, I don't know what you know, you can't fathom me and you can't handle low. But if you get it right, then you could get some more and you could get the better, you could get your hands on some.